Good morning. 8 and 15 seconds Central Standard Time. Welcome to Risk Neutral Trading. This is my virtual trading journal. Get my screens organized here. Yeah, big sell-off happening in the overnight, huh? Isn't that cute? So first things first, this is not for financial or trade advice. There's a disclaimer in the description. I stream this in 1440p, so if it's not very clear on your end, click in YouTube, click the icon and select the high def. I'm not monetized for this stream in any way. It is my virtual trading journal. The idea here is that I capture everything on my monitors for the video, and then my voice here provides oversight or insight as to what I was thinking. And I don't have to be screen snapping and typing and doing all those kind of things, which would be required otherwise. And I do believe that the journaling is very important, and as is narrating the day and the trade. So that's that. The reason why I start every morning at 8 o'clock is with the setup and the pre-market, the numbers, have an idea, an analysis of what's going on overnight, our higher time frame, etc. And then the stream continues until 1500 each afternoon. That is the entire cash trading day. The purpose for that is transparency and accountability. Also, in that same vein, you'll notice that my monitors are shared, not just the application, but the monitor. So at the bottom of the screen, you can see any applications which are open. And the clock, hour, minute, seconds, and the date, which ties up to the particular, whether it's IRT or bookmap. So there's that. Let me make sure that we are streaming merrily along here. It seems to be trickling down the hill, so that's good. I don't know if IRT is going to fall over, or a bookmap is going to fall over again like they did yesterday. It'd be kind of annoying, especially when they had a big sell-off. And yeah, okay, seems like the trading gods were conspiring to piss me off yesterday. All right, so let's move on to the numbers here. I'm trying to think if there was some other thing I needed to say, but we'll figure it out as we go. The reports this morning, we have several out. We have already accomplished all of these, of course, which are core PCE, GDP, retail inventories, initial jobless claims. I don't give any credence to these numbers here at all anymore. Since the administration has started, weeding out people who are doing their job and putting in their own people. I'm real worried about the quality and the consistency of our metrics. At 9 o'clock, we have the existing home sales number out for August, so that ought to be a mover. And that's in 55 minutes. This is my investing.com, which is free. You can pay for it if you want to, but I do not. I don't even notice these ads or whatever. I look at this, and I find this one to be more handy for doing a screen capture and posting in here in the Discord or wherever, because it's easy to read. You can filter it for whatever you want, country, time zone, all that kind of thing. The other news source that I use is Financial Juice, which is also the free version. You can pay, as they put an ad about every 15 screens here. But it has essentially the same calendar on the left here, and then more of a squawk box feel over here. Like we've got, we've got guys speaking up a storm here. Today. This Moran guy, the new Fed guy, boy, I think he had 3 speeches last week, and he'd been confirmed onto the Fed board on Tuesday. But he's a interesting character. This guy right here, if you want to, monetary policy shouldn't necessarily respond to fiscally mandated price changes. Wow. This guy is the author of a real radical study that you should look into called the Mar-a-Lago Accord. And he is still an employee in the White House. So that seems kind of counterintuitive to me, because the entire concept of the Fed is to be apolitical. So I don't know. Over here on the investing.com, obviously, you can also check out the earnings. You can look at days ahead, days behind, whatever. So there's my news sources. And we have, as I said, we've had news out. We've got a huge sell-off going on. Let's get on with that idea here. The pre-market. Okay. Well, here we are. There's the overnight. Boy, if you were just selling the pullbacks, you're a pretty happy camper, eh? This is the ES Mini, NASDAQ Mini. Help if I got on the right screen. ES Mini, NASDAQ Mini. My micro composite higher time frame chart. And the market profile for the ES Mini. I also plot the same configuration for the micros for what it's worth. But I hadn't opened it this morning. Here we go. Because I push these levels, the session prices I make available to anybody that can use them. So let's look at the higher time frame here. What have we done? Well, we had our big double top up here when they, Monday, Tuesday, Wednesday. No, Monday, Tuesday, Wednesday. Here we go. Today is Thursday, right? So it helps me if I know what day of the week I'm functioning in. And here's where you see this little nubbin down here, this little white guy down here. That's where we're trading currently. 56 quarter. Yep. 56 quarter right there. So this is my micro composite chart, and it's real simple. It's RTH session only. These are daily candlesticks. Wherever price overlaps, I draw a volume profile or continue to pull the volume profile around them. And this constitutes then a micro composite VPOC, or volume profile, and it generates the VPOC. So here we are at 6670. It's mine. It's been taken out now this morning, but only in the ETH, so we'll see what happens in the RTH. It also generates these levels, which are designated here by these red and green lines. They're the low and the high volume nodes for the volume profile, the micro composite volume profile. And those high and low volume nodes push to bookmap, as do the session prices right up here, export. And this is, as I said before, the market profile, currently the full session, and when we've opened, I'll change it to the RTH. Our volume is fairly mediocre for the overnight, 171,000 contracts. We're at 0.56% down, looking to open lower. What is, okay. And this is the world famous Bookmap, which is my charting execution platform. And I have a couple of things to start with. First of all, this blue line over here is nothing more than a visual reference for me. remember, this is my trading journal. And so I share it freely, and that's great. I hope it helps or is funny or whatever else. But the idea here, when I talk to you or I'm talking to myself. So bear that in mind. Don't take it personally. This line, I put on it the session start each day at each session, and it's nothing more than a vertical line. The concept is I want to see the entire session in view on the heat map chart here all the time. When we approach a level or a position where I may interact with the market, trade, in other words, I can zoom in and look for the parameters that validate the entry and the trigger and all that stuff, but I want to be damn sure I'm in line with context at all times. And this line helps a lot. I can just glance left even out of my peripheral vision. If I see that blue line, I know I've got the whole session here. If I don't see it, I know I better do something about it. That's that. So here we go. This is the dome. Level 2, obviously. This is my micro composite column where I have entered all of these naked volume points of control and levels and et cetera. The POC here, which you see we might take out today. And these are the high and low volume nodes. My workflow here is that when we've crossed over or when a level becomes inactive or has been revisited, I change the text to black, and then I remove it every weekend, unless it's important to me for some other reason. So this is what happened here. Something's really crazy. God damn, this thing is irritating me. This is the full session volume profile, which started plotting at 1700 last night. And this used to be the RTH session volume profile. I don't know why it restarted over here now. I got no idea. It's supposed to restart at 8:30 every morning, and I'm so freaking sick of this. It's suddenly the last update or something, it's quit working properly. I'm trying all different kind of settings, and the way you set it is reset configuration, okay? And I've got it set to restart at 8:30 Central Standard Time, which is my time zone. Session start. I don't know what the hell is going on. Anyway, let's see what happens at 8:30. And this is a very important column to me. This is my notes column. The first thing I do here every day is clear the notes. This, and you'll see how this works. I then, establish what the open type is going to be, and there's only 4, and I change the title of this column to the open type for the day. And what is it going to be today? Well, if you don't know now, you're in big trouble. It's lower out of range. There are only 2 criteria. And it's real simple to understand. Everything I do is very simple, very straightforward. Only probabilities, statistics, and data. I try to keep as far away from discretionary as I can get. So there you go. How do you determine the open type? Well, if we opened right here, right now, how would that open relate to yesterday's close? RTH close, which is right there, it would be lower, right? And how would it relate to yesterday's range? Well, there's the previous RTH low, so we are damn sure below that. Who cares where the high is? We're lower than the yesterday's range low, so we're lower out of range. That is a gap down open, so we're looking to open in a gap environment. Gap down environment, okay? These are the session prices. They push automatically from Bookmap. And again, there's nothing complicated or mysterious. There's no indicators on my Bookmap or my IRT charting. There is the following lines. The mid for the RTH. The VWAP for the RTH. VWAP for the Globex, which is the full session. There's the POC. brighter yellow is for the RTH session, and the more muted yellow is for the full session or Globex. Now, what is the POC? It is simply the price at which the most contracts have traded so far in the session, period. Right now, we've traded about 2,082 contracts right over here at 68.75. This is 2,069 contracts. The split second that this level right here trades 2,083, this yellow line is going to move to that price. All there is to it. All there is to it. Another line that is confusing to some is the IBs, or the initial balance levels, and there are two. There's a low and there's a high. The reason it's confusing is the name is something from the market profile days, initial balance. What the hell does that mean? Well, what they really are, they really represent nothing more than the high and the low of the first 1 hour of the current RTH trading session. So in other words, the minute we open, this is going to go to the low of the first 1 hour, and it'll keep moving down with price should price continue lower. That's how it works. Just the high and low of the first 1 hour. The rest of these are self-explanatory. The close, the POC, the developing value area high, the mid, blah, blah, blah. Easy, right? VWAP, I guess you could consider to be a, hi Panda, hi baby Panda, could be considered a indicator, but I'm not going to worry about it. Call me a liar if you want to. I don't care. All right, let's get over to the statistics now, which are real important. And they come from an IRT study right there. So here, IRT graciously highlights the correct open type after we've opened. This was yesterday. This will be the open type today. Lower out of range. We've already established that. How does the study work? Very simple, like everything. Keep it simple, stupid. It's the KISS principle here. The study looks back at 1,998 trading days. Of these 2,000 days, we opened lower out of range 291 of them. Of these 2,091 days, price revisited the overnight volume point of control 241 times, or 82.8%. Overnight volume point of control, 82.8. Bam, that's all there is to it. And now I'm going to just simply go down the list. The next one will be, the overnight high. That's interesting. That's 69.4. Here's our overnight volume point of control. Now let's see if we can find the IB high. It happens to be right underneath of the previous RTH high because we set this IB high and never came back. $69.4, and I go IB high. Ooh, I'll try a B this time instead of a G, maybe, huh? B high. Why do I put the initials? Because once we open, the second we open, this level and this indicator line are going to move down to the top of wherever we're trading today. And then I'm going to be going, what the hell was 69.4? I will now just step down through these. We're at 69.4. The next one is the overnight low, and that's 69.1, huh? Overnight low. That's way below us. 69.1. Overnight mid. 68.4. Hi, Panda. I know you want me to pet you, and I'm trying to do something here before I have to do something else. So just cut me some slack, little girl. Previous low, 67. That is right there, if I'm not mistaken. No, that's not. That's the overnight low. What is this? Developing value very low. No, wait a minute. Wait a minute. Previous low is right up here somewhere, isn't it? There's a close, so we got to be below the close. Come on, Panda. Cut me some slack. Previous low is right there. You see how they're all stacked up? The nice part about this indicator is it displays more than one label at a time, as opposed to like wherever it went, as opposed to the flags, which only can do one. Previous close is 44%. Overnight high is 34%. Well, yeah, okay. Now, this is something that ought to... Wait a minute. No, wrong one. Okay, that's going to do it for now, and I've got to do another thing that I do every morning at 8:20, which I will do, and then I'll go tend to little Panda looking at me with those forlorn, oh, Dad, you've forsaken me eyes. I'm going to do the TLab snap. And what might you ask is that? It is a bookmap Discord chat room. Come on, Vanna. Give me some slack. Called the Traders Lab. God damn it. And it is I don't know where I even am now with her meowing and rubbing on me and carrying on. Trying to get this done. I'm not having much luck here. It is a bookmap Discord chat room started by a guy named Tom B. It's completely free. That's one thing. You don't even have to be a subscriber to Bookmap. And Tom is a professional trader. He doesn't ever call trades or post live. I'm sure you'll never see his account, verified. But I believe he's a real deal. And I think he's got good things to say, and it's a good crew of people in there. So if you, want to mosey around and look at something else also, it's called the Traders Lab. It's a Bookmap Discord chat room. It is the only one I would recommend. I've not been to any of the other, there's a lot of them. I haven't been to them. Yeah, I know, Panda. Okay. And the other two that I did go to were just typical. The guy's second word out of their mouth was trying to sell you something. So every day I post this chart at 8:20, which shows all of the levels anybody could possibly ask. And then at about 6 o'clock in the morning, I post the numbers for the day. Yeah, I guess no crisis here. All right, so that's how the statistics work. That's how the high time frame works. We're going to open in about 5 minutes. Oh, yes, I know something that might be kind of important. We probably ought to want to be able to trade, right? The way you trade with Bookmap is to initiate the trade or the trade control panel by clicking this padlock. And then you select a way you will interact with the application using your mouse to trade. Chart, the only place the mouse will trade is the active data column. The DOM is the DOM columns, and both is, both columns. I use multi-brackets, and this is the risk-neutral methodology. This is the smallest risk-neutral package because you need to use even number of contracts. 2 contracts. You set a stop in ticks for the entire package, depending on your account, risk parameters, the volatility of the day, however you use, whatever methodology you use to set a stop, which you very definitely should set every trade. I use, in this case, 12 ticks. So the minute these 2 parameters are set, the first risk-neutral scale is automatic because it is for half of the package, 1 contract, package is 2, and it's for the same number of ticks as the stop is a loss, the same number of ticks in profit. And then there's a runner. If you choose 4 lots, simple, right? High volatility 4 lots, boom, real easy. The key is that the minute you achieve the risk-neutral scale, the worst that can happen to the trade is a scratch. If you don't move your stop away from entry. If you do that, then you got big problems to deal with, much more than this. I also do the multi-account trading thing here, which is means that once I enter a trade here in Bookmap, it's automatically pushed to 4 other accounts. Also, now you'll notice that I have these position metrics up here, same as here. I know that this is the correct lot size, and I don't need any of this other bracket stuff or these tools on the trade control panel because I use multi-brackets. So I confirm this stuff, and I then can click this padlock again, and it stays active, but I get the real estate back. I have all the metrics up here. I have cancel and close. Now I'm ready to trade. And we've got 2 minutes. The idea of the trade copy thing quickly is that this is a TopStep evaluation account and 4 others behind it. They are all within 1 trade of the profit target with no resets, no blow ups, no nothing. And I'm trying to figure out how to show that account data on the dashboard without all the other private stuff, account number and all that stuff. Anyway, the idea here is that this is a fully transparent and accountable record from 0 to hero, from the beginning of the trading on that account, on this evaluations through live. So there you go. I think that pretty much covers it. We're going to open in about 1.5 minutes. I'm dying to see what's going to happen over here. And what did I forget? I don't know. We can trade. That's pretty important. Got the right package on the right contract. Going to open in about 30 seconds or so here, 45 seconds. I'll switch all my charting and IRT to RTH session as soon as we open. Here's where we're trading, right here where this little nut is, little white guy, little nub down there. So we have come under our MCVPOC, and we're looking to open. We're looking to open. Gap down, isn't it? Because there's previous RTH low. And here's where we're going to open. So we're looking to open gap down about, 10, damn near 20 handles. 20 handles right now. And there we go. So we opened, it reset. Looks like it did that okay. That's a good thing. Well, that's great. I hope that continues. Now, remember, we're going to get our IBs high and low are going to come shooting down here. The next update from Bookmap. I'm going to set my vertical Q right there. And I'm going to start flagging my MCVPOCs. What is this? Is that the bright one or the other one? Okay, these are the MCVPO, the migrating volume points of control flags, which are kind of a carryover from the old days, and I'll show you why. Did you see that the IB low and IB high have just migrated down? Now, notice that the lines are down here, but the flags haven't followed. There they are. And that's completely normal behavior, because the cloud node column will only allow me to reset a refresh every 1 minute. These indicators, which are purchased from Bookmap, whoever coded them up refreshes them quicker than, in a shorter period of time than 1 minute. Both the line and the flags are driven by the exact same data instantaneously as it changes from IRT. Boom. So I don't worry about it anymore. So here's the beginning of our session number. We are trading lower. This market could be on the way south. Probably the most dangerous situation, which would prompt a real serious sell-off in this irrational, exuberant environment we've been in, and all this make it up as you go along crap coming out of DC, would be a sell-off for unknown reasons. In other words, there's not a big problem with the economy numbers. There's not a big problem. There's no war happening. Just if all of a sudden the market decides we're way too long here, we've got to readjust our inventory and our valuations and just start selling them, and nobody's buying them. There you go. Now you're looking for real trouble. We are going to trade up too, and don't forget we opened gap rules here. And what do gap rules say? Well, let's get over here and I'll change these over while I'm talking. Gap rules say, by the way, these are all old market profileisms, but those old truths stay really in line, or, prove out frequently. That's why they've been around, I guess. Gap rules say that if we close the gap relatively early in the session, and if we are accepted in previous range and, or more importantly, previous value, there's an over 90% probability that we'll trade across that value area and, to the other side. So notice something here. There was no downside taper. You see how this is the volume area, value area? There's no downside. This gray, there's no excess taper down there. So here we gapped out, and just look at where we opened and how that would fit with the upside taper. In fact, it's right on this balance line, which balances the upside. Okay. So what did I just get through saying? Well, if we close this gap relatively early in the session, and are accepted up here, prices, it's very likely we'll trade across it to the other side. If we don't, price is very likely we'll gap and go. And they got gap and go on the mind, looks to me like. So let's go now to my rest of my workflow. Here's our open, right? Isn't that correct? It is. So this is the MC. This is a little new one here for you. This is the MC gap low. MC gap low. What day is this? 250925. Okay, where's the gap high? Well, way up here in the corn patch someplace. Right up here. So here is, I go from low to high. Low to open, I'm sorry. Or high to open, whichever way we gap. It's the way I look at them. And you can do whatever you want to do. And this is the gap high, and that's for the 24th0925 from yesterday. Boom. There's our gap. Doodly-doop, diddly-doop. Big gap. What is the gap? 60? Well, how convenient. 60 to 78. It's 18 handles. And we are selling off like nobody's business. Okay, let's see now. I think everything's working. We have home sales, I think it is, at the top of the hour. So be careful. Not that there's much to worry about. Careful, I guess. We're falling out of bed. Be careful you don't bump your head. Yeah, existing home sales for August is at the top of the hour. So here we go. Gonna have to scrunch these down a little bit in order to be able to get the day in there. They traded up a little and didn't like what they saw, and here they come, right? They opened here, and we've traded right up to just below open, and down we're going. That doesn't mean we're going to continue that. Here was a POC from the 12th of September and a high volume node that's been taken out. We've taken out let's see what we've got going on for naked volume points of control here. Well, we didn't quite get up to the naked volume point of control from Fed rate day here. That's this line. And we've got these below us. And this is the my micro composite VPOC. So, and there you go. You can use whatever you want. Yeah, well, there you go. As the sell-off started, are we going to do a correction? Are we going to get down around 65? We're already halfway past 66, right? Seems like I've forgotten something, but I don't know what. So I got my pants on, so that's a good start. Actually, it doesn't matter. I'm alone in here anyway. Who cares? And there's our IB low. Again, you see the line leading the flag. Look at that go. They have no interest whatsoever in closing that gap yet. And remember something, the market goes, here's a truism that is really valid. The market goes up to go down and goes down to go up. Think about that for a minute and think about why. I'll give you a hint. It's a zero-sum game. And here we go. Well, if you were a rear view mirror trader or just, flipping a coin, you got short on the open and you're happy as a clam, and good for you. I'm still finishing off my IB trades. One more to get these accounts, all 5 of these, across the profit target, and I'm going to stick with that. That will have properly vetted the IB continuation or IB failure trades. So that means what? Well, it means that, remember the definition of the initial balance. And I guess there's the high and there's the low. Now, this is going to move to down here because we're dropping pretty fast. A lot of selling. A lot of selling. What have we got for big liquidity? Laying around here, nothing. Okay. Look at them go. Oh, yeah, baby. They're going to do they are going to bump some longs out. That's for sure. So anyway, back to the IB. How do I approach these days? I keep the context in view. There should be no question in anybody's mind what the context is. We gap down and we are gap and go at this moment, from the looks of it. The IB high and the IB low are nothing magical or mysterious. They are simply markers of the high and the low of the first 1 hour of the RTH trading session, period. These lines and the flag lag a bit behind price because of the refresh rates allowed or enabled by Bookmap on these 2 indicators. You'll notice that over here on IRT, they're exact. That's how it works, instantly. What have we got for volume? Ooh, not real. Let's have a look. Am I here? Yeah, I am. Whoa, 131% volume, same time yesterday, same time, average. I mean, geez, I can't even talk. And a huge pump in, we were down to just about 2 average true range, and now we're up to 3.25. None of that's surprising. Open interest is way down. Harmonic rotations, something I feel like I should be using, and I just can't figure out what to do with it exactly. But, if you can, drop something in the chat. Let me know what's going on. Let's look at where we are now in the higher time frame. Well, we had irrational exuberance all the way up in the face of, despite what some of the talking heads over in DC are saying, it is not lower inflation and robust growth. It's higher inflation and muted growth. There is hard evidence that the tariffs, you don't even need evidence. Do you have a brain? The tariffs are adding an inflation component. If the cost of goods goes up because of tariffs, that means inflation. Inflation is the cost of goods, the cost of life. Guys are crazy. The worrying part to me is that there seems to be a real prevalent, if you say it often enough, it'll be the truth, and complete disconnect from reality, sticking strictly to the narrative. That's dangerous, I think. I'm surely no, whiz-bang economist, but I'm an old cowboy with a lot of common sense. And I think I'll stick with the common sense idea. What have we got now? We got 1 tick of excess at the bottom here. That's not good. if you're, wanting to go higher. Better get the NQ skewed into range here. I can change the thickness of the number of the Renkos and all that stuff here with IRT if I need to. Got a 9 millisecond lag because I was messing around with that. We know where our volume is. Get back to the bookie map here. Let's hope bookmap doesn't take a dump like it did yesterday. I finally just, I don't know what I did, took a nap and did some backtesting stuff, and it was completely unusable. I tried several times, and it had a problem parsing or using the MBO data and would not allow me, it wouldn't stop throwing pop-ups long enough that I could get to the configuration settings and shut off anything to do with market by order data, which is pretty stupid that that's the case, but that was it. And you can't start bookmap and not be connected to the data, I guess I could have shut off. I guess I could have maybe, I didn't think about this at the time. I probably could have shut off or disconnected from IRT, from Rhythmic, which would stop the data. And then open bookmap so there would be no data for it to fall over on and change the settings. I didn't think about that. That was my, that's a bummer on my side. Yeah. Okay. Well, so here we are. We've had some news. We've got news at the top of the hour. New home sales, so that ought to be that ought to be pretty fun. Here's our migrating VPOC, which I've not been a good boy and kept up. And I'll explain the how this is evolving. In the beginning, sound like the Bible. Previously, I would keep this like this. I'd have it about 2 ticks high, and I'd have around 5 minutes or so here. So, wide. So where'd this come from? Where was it before? Do we know? Who knows? So what I would do was I was real vigilant about flagging these migrating VPOCs because as price would, let me see if I can do, as price would continue, it scrolls off the left of the screen. So where the hell was it before that, right? Now that I have changed my methodology to what I think, what makes more sense to me is my blue boy over here. Now, as I said in the pre-market, this blue line is nothing more than just a visual reference, and I slap it on at the session open, each session open, and I think it's gotten out of whack here. And it's 30 seconds off. Oh, shoot me. Okay, so anyway, the only purpose of this is to mark the session open so that when I glance out of the side of my eye or my peripheral vision, I can see. I want to be sure that I see the full session in view. And if I see that blue boy, I know I've got it. Why do I do that? There's not many things more important than, of course, the immediate price in trading than context. And I don't think anybody would argue with that. And when I do this, I know what is my context right now. Well, we know we got a gap low right there at the open. And our context is down. So taking a long, you better give a long thought to that one. And the reason then that these flags aren't so important is because I keep the entire session in view and I can see the yellow brick road. on IRT, it's just I have all the indicators the same color, the same setup. Not indicators, but the reference lines. I have no indicators. I guess you could call VWAP an indicator because it is calculated. It's the volume weighted average price. So yeah, there's that. Anyway, this is the point of control. Now I don't have two of them. The point of control for the overnight is off the chart because is off view because we are only looking at RTH sessions. So this is yesterday, right? If I can get this, stop being an asshole, I can get this. It doesn't want to do it because there's a huge amount of data coming through. This is yesterday's RTH session, and here we are. Yeah, so there you go. So my point of that was that you don't see the overnight here. If you want to see the overnight, what I do is jump over here, and there they are. There's the overnight. Here we are today. Wait. Because this is a full session, right? So today is right down here, actually. Let's get rid of these guys. Oh. I didn't want to do that even a little bit. What I wanted to do was that. Ah, damn it. What have I done to myself here? Oh, I don't want to be day session only. No, 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 no. Come on, IRT. Bitch. Full session only. There we go. So here's our day. Here's our current day volume down here. This is as you might recognize, this is the basis of the chart that I post every morning at 8:20 on TLab. But here's all the overnight, RTH, ETH, RTH, back quite a ways. Naked volume points of control. Easily gives you an idea what the hell's going on. Here's another view that I use sometimes. This is maybe a little cleaner. Yesterday, today. Do whatever you want here. So back to the point at hand. Let's go back here and see where we are. Well, what's happened to my context? There we go. Sky is falling. Well, maybe not. Maybe it's a cloud. So let's be cognizant of what we've got going on here. Here is a previously revisited, so I'm going to take that off, actually. Naked volume point of micro composite point of control. Here is our gap low. Here is a naked volume point of control from the 17th of September, which has not been revisited in the RTH. Remember that I always look at those from an RTH point of view. And here's my micro composite volume point of control, also from the 17th. There you are. And that is right here. And here we are trading, and here we did, and there's our gap. Now, how will I do this micro composite going forward? Well, if price doesn't get back through the gap and close it, this will be the end of this micro composite volume profile. And I'll see what happens after tomorrow to start a new one. Because my workflow or my methodology is, follows the KISS idea. These are RTH session only. These are daily candlesticks. Wherever price overlaps, I continue to draw the volume profile. When price doesn't overlap, I don't anymore. Pretty easy. It's not an art form. I don't think anything should be an art form in this world or this business. I think it should be I think your every waking moment in trading should be to eliminate discretionary decisions, because that's what trips us up as human beings a lot of the time. So, oh, look at there. I'll hick 'em up. And I am just, OCD enough that I have a hard time stopping stuff like that. And I also have a hard time because of bad eyesight, get them in the right level. Anyway, I guess my take-home message is keep it simple, structured, and consistent. You'll notice that if you've listened to this stream at all, I try to do this, follow the same format through the pre-market and everything, the micro composite. I don't think it needs to be some sort of art form or mysterious thing where I got to wear a real pointy hat with a half moon on it and use a magic wand, What is the rule? The rule is price overlaps, it's in the micro composite. If price doesn't overlap, is not. Start a new one. If depending where you got an island top or whatever happens. When price starts overlapping, you start that volume profile or you start that micro composite. Everybody wants to make things seem like they've got some secret sauce, I think, and that irritates the shit out of me. It's almost a crusade. That's why I am so fixated on this stream being absolutely transparent and accountable. If I have an edge, and I'll go through my backtesting stuff after a while and how the rules work for those backtests, those setups. If I can share that with someone, I'm talking to myself here. Remember, this is my virtual journal. But if somebody, one of you guys listening here picks something up from that and does great, couldn't be happier. And all this, it's going, I can't share that setup because that's gonna, erode my edge. Right. Market on close imbalance orders are 1,300,000,000 or 400,000,000 contracts. Do you suppose that a handful of us trading the same setup is going to make a difference? I'm pretty sure not. But some people really want to feel like there's, they got balls the size of it. Couldn't fit through the door. I mean, come on now, If I can tell you specifically my setup and it helps you make money, couldn't be happier. Let me know, drop something in the chat. Hey, I got funded, or I'm profitable now, or whatever else. That'd be super. And I guess it's time I could, as we stand here waiting for what they're going to do next. We got 30 seconds for the news here. Let's see what happens with new home sales. My guess is down. Let's see. Should be right there. I'm going to guess down. Oh, there we go. 400 million up 400,000, I guess that would be. Less, down 1/10 or 1/100th from previous. Oh, there you go. I don't believe any of them. I'm sorry to say that I really question any data we're getting now because of the heavy hand. If any of you are old enough to know what a butcher's thumb meant, that's what we've got going on right now. And what is this genius up to? Okay, we got this big pissing match going on with the old Fed and the new Fed now, and he's going to read. Trump is going to agree. Erdogan, at 10. The only thing I like to look at, I don't really, these things irritate the living shit out of me, but it's, without making any political statement one way or the other, let me say that if you are a project manager or a business person and you have a business or a project, after you have that established and resourced and whatever else, it's going, one of the key things you need to do at the outset is to identify any risks to that project or business and to figure out a mitigation plan. It's part of the PMI thing. I mean, everywhere. Common sense, right? Well, one of the most dangerous things that can happen is if you have unidentified critical risk. And that's the situation we have currently. Now, Financial Juice is getting as good as they can do, picking up these places where Trump or somebody in the administration is going to be near a microphone or a camera, because it's well recognized, and you better have recognized it already, no matter how you believe, what those guys say, those folks say, can have a real unexpected impact on the market or the auction. So therefore, it's a unrecognized critical risk, and that's why it's important as best we can to know when those times, just like non-farm payroll, same idea. We want to know when the hell that is, or I do. If you don't, well, that's up to you. But that's the idea about it, having nothing to do with politics or anything else. It's got to do with how any unidentified or unexpected risk can influence or impact the auction, which is what we're doing here. There you go. And well, we've zoomed over 9 o'clock. So I guess it's time to start thinking about the IB statistics and trading as a business to kind of explain where I am and what I'm doing. Not much reaction to the home sales, a little bit of a bump. How much, huh? So my mission here is to approach and develop trading as a consistently profitable business, not a video game or gambling or gunslinging or throwing the darts or whatever, And remember that this is my virtual journal and I'm talking to myself. So when I say things, I'm telling me. If you don't agree, great. If you disagree, Want to put something in the chat? Super. Have a dialogue. And I'm not, the purpose of this stream is not my way or the highway. This is what I'm doing. If you've got some way that, you know, watching which way your cat covers crap makes you consistently profitable in the market, don't ever, you know, take good care of that cat. You know, I mean, that's it. So this is what I'm doing and how I'm approaching trading as a business. The first thing that you need to recognize, in my opinion, this is a random environment because it is. Stop and think about it. There's an old saying, it's like herding cats, right? Think about the millions of people that are involved in this auction, all making a decision, all casting a vote one way or the other. Jesus Christ, you know, talk about random. And it is a statistical fact that the outcome of the next trade right here is 50-50. It's like a coin flip. And that really rubs a lot of people the wrong way who don't understand probability and statistics. Now, it also brings into focus a saying that we all hear every day. Most everybody, I believe most everybody attributes it to some lawyer speak, but it is a statistical fact. Past performance is not indicative of future results. All the crap that happened back here has absolutely no impact on the statistical result of the very next trade, which is 50-50. This is a binary event. It can only go up or down. Period. There's no horizontal movement. We put that on by introducing time for our little, you know, monkey minds to try to grasp something or try to look for some pattern. So if you realize that you're operating in a random environment, there's some things that you can take on board. A, how stupid is it to try to predict something? You can anticipate what's going to happen, but then you need to, and that's where these old sayings like trade what you see, not what you think, you know? Okay. So let's take this a little bit further then. It's a random environment. The outcome of the next trade is 50-50. What can I do to give myself an edge? Positive expectancy, whatever. Well, you identify patterns that seem to repeat a lot. Now, I haven't had to invent all of those because there are some of them that have been around since Christ was a carpenter. From the market profile days, the initial balance, for example. There's a statistic for you. The initial balance I've already covered is just the high and the low of the first 1 hour of the RTH trading session. So, after 9:30, the IB statistic is active because the IB high will no longer go up, the IB low will no longer go down. That is the range of the first 1 hour. We are currently in a 29 handle range. That's pretty big in this environment. So what do? Well, if you go back to our statistics study over here, there is a statistic associated with the initial balance, and it is right here. There is greater than a 97.6% probability, looking back at 2,000 trading days, that price will revisit and exceed the IB high or the IB low at some point in the balance of the RTH trading session. Say that again. The statistic says that after 9:30, at some point, 1 millisecond after 9:30, 1 millisecond before 1600, price will exceed the IB high or the IB low at some point in the balance of the RTH trading session. That is the statistic. What are we going to do here now? Are we going to make a new statistic? Nope, because it's not 9:30. Can you trade now? No, because you're anticipating the statistic. There is no statistic to trade yet. Let's fast forward to 9:31. The statistic is set. The IB high and low are going no place anymore. I mean, the levels are set. The statistic has not been. Price trades up and trades through the IB high. Now the statistic has been set and taken. In that case, then, you have two opportunities, two initial balance statistic trades. And they are the IB failure, which means price would trade up here like this. Let's assume it's past 9:30, and I'll use the IB, and there we go. See, now we just exceeded this. That doesn't mean anything. Now we're getting into the gap. Look at there. We've just crossed into the gap. Will we close it? Will we take the POC? Anyway, back to my conversation about the IB stat. So we have two opportunities. The IB continuation, price comes through the initial balance, high or low, takes the statistic, sets this, makes the statistic, I guess is the way to say it, satisfies the statistic, trades back down, can't go any lower, and continues higher. The other trade is the IB failure. Gets up here, can't get any more horsepower, and trades back. Now, the IB failure is a fancy name for mean reversion, outside in. How do you imagine, or how do you anticipate which one of those might be the case? Well, typically, you look at the day and the context. This is a gap situation. This is kind of weird. If it is a directional day, which we're pretty much directional now, isn't it? Then you would anticipate an IB continuation trade. If you are rotational, boom, just building, balanced rotational, you would anticipate an IB failure. After you've reached that point, then the next step in your development of a trading business is you've identified the statistic, you determine what parameters you require to justify an entry and the trigger to do that. Then you capture a statistically significant data set by backtesting or, trading ahead, but that take, donkey's years. You capture the data for that specific setup and criteria. You need to have enough samples in that data or occurrences to be statistically significant, which means you're outside the possibility or the probability of random distribution. The more, the merrier. Minimum of like 100. After you've captured that data, you determine mathematically, statistically, does it have an edge or not? Or an expectancy? If it does, then in the live market, you take that setup and those parameters every time they present themselves, and you use the law of large numbers to manifest or to compound that edge or that expectancy to your bank account. Now, that's a mouthful, eh? But it's not my, I didn't go up on a mountain and have a burning bush give me this information. I am just agreeing with, or I don't know what you want to call it, with the top traders and hedge fund people in the world. Ed Thorpe, Jim Simons, Ray Dalio, Paul Tudor Jones, Tom Sosnoff, Tom the Trader, the best, loser wins guy, Tom B in the Traders Lab, Rod, from the top to the bottom, they all recognize at some point in their career, and if you listen to them speak, you'll hear them eventually talk about this. Mark Douglas, for example, is a trainer that did that it's about probabilities. And the key to backtesting or vetting the trade and the setup is that the parameters have to be the same. How can you possibly have a statistic that says, well, over 100 trades, I achieved T1 60% of the time, I achieved T2, second profit target, 90% of the time, and I got stopped out, whatever. How can you possibly do that if you're changing them all over the board? If one T1 is 5 ticks and one T1 is 10 points and one stop is 50 and one point, the next one is 10, they've all got to be the same. It's, I know, boring as shit, but trust me, that's what's got to happen. Once you have done that and you have those statistics, now, boom, you've got a vetted setup for your trade plan, and you move on to the next one. The reason that I chose the IB trades is because it gives me 2 opportunities, one for each market type or each context, directional or rotational. So that's where we are. That's where I am now, and I finally got some reasonably good backtesting going with sequential rules that are playing out well, and we're looking at them pretty in detail in Statistic and wherever else. So here we are. The numbers are over. We're into the gap. We haven't hit the POC yet, but we're getting close, and this would close the gap. Context looks like it's changing, huh? Sell off, couldn't get anywhere, tried it again, couldn't get anywhere, and now we're trading up. I have nothing to do because it's not the initial balance isn't set. Some other things that are important to consider in all of this is, kind of along the same line, that win rate, for example, is completely useless when taken out of context with the other parameters that it depends on. It is it's the stock and trade of most clickbait and internet gurus and bullshit artists. I can have a 95% win rate and go broke in 10 trades. It's the risk to reward ratio in conjunction with the win rate that makes the difference. And if you add that with the loss rate and average loss, you have what is called the R ratio, or the R factor, or expectancy. That's what you're looking to find. In other words, over 100 trades, your stop is your risk, right? I am risking 3 points. Every trade of 100 trades, I risk 3 points. Of those 100 trades, how many of them achieved T1, which would be 1 R factor, and T2 is 4 R factors. So if you get all of that, you got 4 to 1. Or if you want to figure out expectancy the old way or the longhand way, it's the win rate times the average win minus the loss rate times the average loser. And that is your expectancy. Shoot your best shot. But these guys with their win rate this and their win rate that, it's like when people say the market went down because there's more sellers than buyers. Jesus, just first laugh and second walk away, because they have just displayed absolute ignorance about the futures market. Think about it for a minute. like everything that I talk about. It's logical. Think about it. When we talk about trading, what are we talking about? Contracts, not stocks, not shares, contracts, not dollars, not pennies, contracts. What is a futures contract? It is an agreement, a contract between a buyer and a seller. How could you possibly have more buyers than sellers or more sellers than buyers? It is impossible. So when somebody tells you that, you know right away they are a complete freaking idiot when it comes to trading. They are missing the entire point, the basic point. How does the market go down? Aggression. Sellers are more aggressive and they cross the inside market and hit the bid. And down we go. They take resting liquidity. How does the market go up? Other way. Buyers are aggressive. They come across the inside bid and take resting liquidity on the ask. That's how the market goes up or down. There is no goddamn way, any way, shape, or form, that there are more of one than the other. That drives me so nuts. And I hear people do that on, talking to thousands of people on TopStep TV. There's one guy there that continually says that. I even called him out once and he gave me some line of crap. Which just displayed to me that he had no idea what he's talking about. And this is one of the coach guys, right? I don't listen to that anymore. But I was trying to figure it out, trying to experiment with it and see what the hell I thought about it. And I heard that guy say that. I said, what are you talking about? More buyers than sellers. Or in this case, it was down. And he had some retort. I don't remember what it was, but it wasn't correct. Or he didn't say, yeah, you're right. So there you are. Be careful. Be careful. We're approaching that MCVPOC up here and the high volume node. That will be a pretty substantial. Typically I would expect a lot of stops above that, but with the volatility and the gap down, I don't know what to think, frankly. I suppose that all the boys and girls that were just convinced that this was going to go to China, keep going until it got to China, a logical spot for them to throw their stops would be above these highs and or above this MCVPOC. The thing you've always got to remember or ask yourself that a lot of people, I think, overlook. How many people do you think there are that have their microcomposite VPOC that even know what that means or graph or chart it, number one, or two, have it at the same location? So how can that be a real line? Now, an undisputed level, the IB high that everybody on the planet knows about, previous low, previous high. Those are undisputed levels, and one of the biggies now is the VWAPs, of course, but levels that we use down on the, down at street level here, boots on the ground level, like the microcomposite VPOC, I would bet you $100 that nobody in any hedge fund or any quant world knows what that number is or where it is. Just this morning, someone in another Discord place was talking about how their microcomposite is an art form and this and that and something else. And good. But the point is, this is how I do mine. And that's where my MCVPOC is. Just within the small group of people between that Discord site and me, we have different ones. So how can you possibly think that that's an important level? Always need to ask yourself that question. You are not, I know this is hard for some of you to hear, you are not the center of the universe. That's the great one's job. Agent Orange. But it's truth, you know, and we're all guilty. That's a human nature. That's the monkey mind. We are the paradigm from which we judge everything outside of us. But some people fall into the trap of thinking that that's a pretty big deal. Now here we have taken my microcomposite VPOC. And don't forget that these high and low volume nodes are generated by my microcomposite volume profile. If I draw it differently, guess what? Going to be in a different place. Getting pretty close to this gap high, huh? Closing that gap. There are some statistics about closing the gap. Oh. Probably. Let's think about this for a minute. Let's look at our statistics over here. And this is not any secret, super nifty deal that somebody posts somewhere with a little screenshot of one column. This is a built-in, out-of-the-box study from IRT. I'm not saying there's anything wrong with it. I am just so sick of everybody acting like they've got some secret sauce. Believe me, nobody does that I'm aware of, and you should not feel like you're missing out. Be logical, approach it statistically and from probabilities, and you'll be a successful trader. That's for sure. Anyway, back to put my soapbox away now. This is the homework study, it's called. It was developed by Chad Payne, who built pretty much most of IRT. It's no longer there, which is disappointing, but that's good for him. Here are the 4 open types. We already went through those in how you determine that in the pre-market, so I'm not going back there. And we know that this is lower out of range. What is lower out of range? That's gap down. What's higher out of range? That's gap up, isn't it? It is. So, looking back at 2,000 days, call me a liar for 2 days, 1,998 days, when we gapped lower, price revisited the previous low that would close the gap, right? That closes the gap. 66.8% of the days, 195 days out of 292. And notice this. What do you think the market's been doing lately over the past 2,000 days? We've opened lower out of range 14% of the time. You know, that is the smallest percentage. I would guess the market wouldn't that say the market's going up and to the right, which is pretty much, we all know, is the case. Anyway, enough of that noise. But so this study is real valuable if you have IRT. It's called the homework study. Just open the damn thing and away you go. Set it up for the instrument you want to track. And that's the case. We closed the gap over 2,000 trading days we gapped lower 292 of those days, 10%, a little more. Well, 14%, duh, it's right in front of me, football. We closed the gap 66.8% of the time. Boop, there you go. Statistics, isn't it magic? I'll tell you another thing too that was part of my spiel about a trading business and probabilities. Besides the most successful traders in the world and hedge fund managers, it is probabilities are, oh, here we go again with the every two every 2 ticks, this liquidity. This started 2 days ago. I don't know who that is, but it's cute, isn't it? They throw an order, they throw resting liquidity in every 2 ticks. Boom, 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 boom. Boom, 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 boom. That happened the other day, too. Back to my story. So the business model of statistical probabilities determining your expectancy or your edge, and then relying 100% on the law of large numbers to compound that edge to your bank account, following specific rules set forth in your setup, is the exact business model of the gaming industry from the point of view of a casino. Think about it. They play no game on the casino floor for which they have not pre-identified very specific rules, and whether that game with those rules has a positive edge or not. When they have determined that to be the case, they roll that game out on the casino floor, and their single only mission in life is to play that game following those rules as many times as they can in 24 hours. They know that gamblers will win. We know that the market's 50-50. What does that mean? That means you got a 50-50 chance of being stopped out, of taking a stop or having a winner. We know we're going to take stops. We know we're going to have winners. The casino knows gamblers will win. They don't freak out. They don't change the rules. They pay the guy, say, here, have a drink, Screedle, whatever your name, whatever they say, and they deal the next hand, because they are relying 100% on the law of large numbers to compound that edge, which they have predetermined to their bank account. And I think it should be pretty obvious to everybody the successfulness or not of a casino, except for one guy I know that went broke with a casino in Atlantic City, went bankrupt. But, typically they're good money makers, huge money makers. And that's one of the oldest industries next to, I guess they always joke that prostitution is the oldest business in the world. And I guess gambling's probably second. So there you go. If you want to be the casino, you want to have a stress-free, because you're trading within your predefined data set of probabilities. How many losses in a row? How many this? How many that? 10 losses in a row. Well, is that within the data parameters of my backtesting? If it is, then next trade. If something is going askew, then maybe you're gonna put it on pause and look at and see what's going wrong, what's changing, perhaps. But that's the way to run a successful trading business. And here you see, as I'm busy talking, we have now crossed over 930. So this IB statistic is in play. This is a tough one for me, because the IB continuation trade would be what I would anticipate, because we're in a directional market. The gap is right above us now, 72.78. So that's 6 handles. Okay, I got to get this out where it belongs. I typically keep this at 1 point high and the context in range. That way I have a consistent scale in my mind. The problem is it's such a big range that I'm not seeing anything, right? I'm not seeing any of the levels above us, which is not good. So here we have it. I have a requirement, which is a range requirement, and that would be that if I'm going to look at the IB high continuation trade, I need to have an unobstructed path to the risk neutral scale, and that means no lines or levels in the way. Which would be the case. And this is a little bit spooky to me, actually. It would be a little spooky for me to take an IB continuation because that means they've got to close the gap. And also, it's important to remember your goal as a trader, your target as a trader is not risk neutral scale. It is the profit target. So assuming I took an IB long off of here, that's 72. Let's call it 73. Make it, because I'm slow. I've got to get 12 points above that. So I've got to get 85. What's up here at 85? Space. All part of this huge sell-off yesterday. Now, 66.92 was the POC at close yesterday. I don't know that I did my full workflow here. Hold on a minute. There's settlement. This should be the naked volume point of control. Sorry, I didn't put that in there, right? From yesterday at the close. And that has been has not been revisited. Now, this beauty down here has been revisited. So what my workflow is on these levels is once prices come through them, I set the text to black. And I'm going to let this one ride. I'm going to let the gap ride because I want to see if the gap's been closed or not. One thing that I will very definitely say is do not. My data has shown me it is a very bad idea to trade toward the statistic. What do I mean by that? Well, here is the IB statistic, okay? We have not taken that out. This is before 9:30. There's been nothing happen. Okay, so your mind is going, Monkey Boy is going, ooh, we're above the VWAPs, we're above the POC, we're above the mid, we're above the, and you go along, targeting the IB high. I don't have a statistic or a number for this, but I can assure you that many, many times I've tried that, and price will do one of these numbers and stop you out. May go on and take the stat, may go completely the other way. I'll never forget one day in the Traders Lab, we went up here and did one of these numbers, and somebody was going, oh, we're going to get the IB high, we're going to get the IB high. And I just typed in there, I said, yeah, now, and watch them go down and take the other side and set the statistic on the IB low. And sure enough, that's what happened. Well, 3 or 4 people thought I was some sort of wizard, and that was just like, no, it's 50-50, and that's all there's to it. But I have been standing here watching these screens enough to know trading this long, betting up there, that's not I don't have a positive statistic that says that's a good bet. What I'm doing is vetting the IB trades, which are after the stat has been taken. Then I make that decision. I hope this is working. I never do it this way, but I'm trying to be able to keep, if I do that, then I don't see the top end, right? And if I widen out, that doesn't make a lot of sense to me. See what I mean? What the hell? What happened over here? What's our context? Up, down, backwards, forwards? I don't know. So I need to have more. I need to be able to see more of this, more of the market. This would work for me. So we have a 66% probability that we will close the gap. And after we take this high, if we show continued strength, that does have the range requirement to risk neutral, but then it's kind of dicey after that. This is an iceberg, and he's just letting it run out. He's got his order in there at 14. That's a sell. What does that mean? That means he's long from down here someplace. My guess is he's long from down here someplace and going to take profit. Or he's trying to pick a top. So let's watch this market develop and see what the hell Uncle Boomer's going to do. The Boominator's going to do here. Maybe nothing. I'm a little hesitant to put the music on today. I've had kind of an interesting story with whatever this place is called. YouTube. I very meticulously researched music, because YouTube has got a real big deal about copyright stuff, as they should. And so I did a lot of this and that and research and whatever else, and determined that from everything I could figure out, that Epidemic Sound was probably the best, or had what I was looking for, which is playlists. I don't want to be thinking about it. I don't hear any of the music here. This room is completely quiet. If I want to hear what's being streamed, then I have to put my headset on. But a couple of people had said, that they like to have that music, so good. Anyway, all of a sudden last week I had I've been using 3 playlists off Epidemic Sound since I got the account and whitelisted it and did all that stuff you're supposed to do for months. And last week or something, I got 3 specific copyright strikes, but didn't block the channel or do anything else. Surprised the hell out of me. So I've contested it, one of them, and we'll see what the hell happens. But I just thought it was weird after, I don't know. And I'm sure that there are it's like lawyers chasing an accident. I'm sure there are people that can do some coding that are just all over the place trying to make a buck off of copyright stuff. And I've heard some pretty crazy things, like people have AI generate something for them, and then they post it, and then somehow or another the AI site they were at says you owe us a copyright. I don't know if that's ever been true, but that's pretty weird. And I can promise you, I'll be singing to you. So let's see if the Mookie works. Boom, boom, boom. So welcome to the stream. Smack the thumbs up, subscribe, send money, all those things. Most, equally, or if not more so important, besides the thumbs up and the sub, is throw something in the chat. Where are you? What are you doing? What do you think? Is this all crazy? Am I nuts? Anything. How can I be so good looking? Yeah. Well, we Anticipate the IB statistic. And in trading, it could sort of be close counts and horseshoes and hand grenades, and I guess you could add trading into that too, you know. Is it good enough for everybody that we got right here and there's a low? Is that close enough to closing the gap? 4 points? I don't know. Ooh, way up in volume. Look at that. Oh, and look at our ATR. Holy smokes. That bummed you out right there if you had a 3-point stop. Absolutely. So you saw the ATR way at the top, remember? Okay, let's see. 70, 65. Oh, look at there. Just about 5-point swings, right? If you're working as I am with this setup, with this risk neutral package with a 3-point stop, got to have a pretty good entry. We had a VPOC migration somewhere along the line. Is that true? Yes, it is true. Right back somewhere. Oh, right there. Okay. That is a setup that some people trade. And it's probably the worst one for me to, the worst statistics that I have. It's frustrating because obviously, how can you miss the yellow line zooming around, right? How can you miss that? Pretty tough. But that's meaningless. That gives you a heads up. Now you need to identify the criteria to validate the entry. And that's where I fall down on this setup. Just me. The idea behind the setup, of course, is obvious. Remember the definition. The POC is the price at which the most contracts have traded so far in the session. What does that mean? Well, that's the most agreed upon price when the most buyers and sellers agreed to do business with each other. Could you consider that value or retail or whatever, however you want to look at it? And so then if that price moves up, looks like they're accepting value higher, or the other way around. That's the concept of the VPOC migration trade. Now here you go. If you were all excited and you trade into that statistic based on, oh, this VPOC migration is going to be the goodie, and you go long here, okay, you're risk neutral scale, so that's good. But you haven't taken the statistic out yet. Will you? Yeah. There's a 97.6% probability that you're going to take this line or the low, which is way down there below us, at some point between 9:30 this morning and 1600 this afternoon. Those levels disappearing are so annoying. When the update is syncing over here, and then it occurred at a time when Bookmap was going to update the flags in the cloud node column. You see that my over here is exactly correct, and nobody goes away and nobody does anything. a lot of moving parts over here in Bookmap. That's why it fell on its ass yesterday. Fell on its ass with such degree that you could not get loose from it. Look at there. Oh my goodness. Now if you're chasing this thing, and there you go again, you see, if you're chasing this thing and you got long up here somewhere, there's a couple of reasons why that's a bad idea. A, I've already talked about don't trade to the statistic. And here's another one. The importance of asymmetrical trade locations. Now, if you got long down here, I'm not saying it's a setup I do, and I certainly didn't. If you got long down here, that could be considered an asymmetrical trade location because the ratio of risk to reward is asymmetrical. If you get one tick down here, if you go below right here, down to this liquidity, you know goddamn you're wrong, eh? And you have small reward, a small risk compared to a potential reward. If you're chasing and thinking you're going to trade to the stat up here, well, first of all, you're stopped out now. And second of all, what's happened? Well, you've got all this room and all this price action below you, all this heavy traffic. You've got the POC here, which is the most traded price. What's that mean? The most likely place where trade will occur. And you have all these levels above you, providing obstacle. I'm not saying I'm a soothsayer. I'm saying this is common sense and logic, and you need to keep yourself rooted in that. And the asymmetrical locations figures right in with the importance of risk to reward, you know, which I talked about a little while ago. Probabilities, boys and girls. Now, I think, I could be wrong, but I doubt it. That would be unusual. You see how this is kind of a muted yellow? I was wrong when I put this flag. This is the full session VPOC. This now is the current RTH session VPOC. So now this is correct. I apologize for that. That's a oopsie doopsie on my part. And the way I should have confirmed that, in fact I did, but I was busy talking and I didn't continue. None of this, once again, is magic. I could have predicted pretty precisely when this was going to shift. How? It's just the marker of the price at which the most contracts have traded so far in the session. Here we were, 75, let's call it 7,550 contracts. We get up here to 7,545. You can bet your sweet ass that this line is gonna migrate up here pretty darn quick. And here we go. This is 75.46, and this is 76.09. That's about 50 handles. It only took 50 contracts. It actually only takes one contract difference to move this line up here, because all it does is mark the price at which the most contracts have traded so far in the session. That's all. Period. And what else does that tell you? Well, if they decide that this is too high up here, and remember they still haven't taken the IB high. If they decide that this is too high up here and they get bored with it, or you know they want to get lower or do something for whatever reason, it's only going to take them 50 more contracts to bring this right back down here. You know? It's just data, probabilities, statistics, and logic. volume, part of that package, I guess. Boy, I got this statistic. No, that's the that was the previous high or something. What was it? 82.8? I forgot now. See, I should put those initials everywhere. Something's covered up there, I think. Let's see what 82.8 was. Boop. I hate it when my fingers hallucinate numbers. I cannot tell you why this level is here. Oh, I can. POC? Let's check. No. Well, that's pretty. I clear those notes. That's why I clear the notes every morning in the pre-market and then start fresh. And I cannot tell you, there is no level that's 82.2. There's no statistic in today's world that's 82.2. So I'm really confused as to what the hell that was. Ooh, the boss is calling. I could be in big trouble. Stand by. Well, you guys get your trading hats on here because I've got to. Whoops. Oh, this mouse must be dying, I guess. I got to go help the boss here. Look how many times we've teased that statistic, huh? So anyway, I think you get the point. Remember, this is my journal and I'm talking to myself. The reason I talk to myself this way, besides years of disturbed mental behavior. No, I believe that it's really important what you verbalize. I believe that your subconscious mind listens to what you tell it. I don't have any problem not overtrading, being disciplined, because I tell myself I don't have a problem with that. You spend all day telling yourself, I just can't control myself. I can't stop overtrading. Then your subconscious mind goes, okay, dummy, you're going to be an overtrader. I believe that's the truth. And if you look into it psychologically and you know, if you're spiritually, if you're prone to go that direction, it's all, everybody pretty much agrees, I think, that that's important psychologically, spiritually, metaphysically, whatever Lee you want to use, however whatever makes sense, resonates, makes sense with you. Do that. And that's why I do it. This little explanation. Glad to see some people here. Throw some thumbs up and whatever else. Well, Jesus, look at this. I smell breakfast out there. I think that's what she wants help with. That's probably what it is. That's tough. There's only two things that I really have a hard saying no to, and breakfast or food being one of them. And I've been here for 5 hours, so, you know, I deserve it. Okay, any question in your mind why you shouldn't trade to the statistic? Let's see if I can get this right. Trying to get it about 1 point like I like it. There we go. Pretty hard to get the entire session in range, but that's 1 point high, meaning that every one of these levels is a point, and within each one is, of course, 4 ticks. It's bookmap for me is real easy to get out of perspective. You know, this thing will zoom into like milliseconds or some stupidness. I don't, who the hell, why, I have no idea. But what I understood about somebody from at Bookmap's evolution, they started out as a quant trading outfit and ended up doing this. I guess they figured they could make more money renting this out to retail guys. And who knows, maybe they are still a quant trading outfit and they trade, they take the other side of these trades. Who the hell knows? So I'm going to try to run out there and help Mom before she gets her back up there and pissed at me for whatever reason. So here you go. There's your statistic. There's 930, eh? We didn't take the stat. Didn't take the stat. VPOC migration, we didn't take the stat. Remember that this is only important to me because I am working on the IB statistics trades. If you're trading whatever and you took the VPOC migration and you got long and scaled here, good for you. That's, you know, remember, it's not my way or the highway. This is just my virtual trading journal for what I am trying to do here. What I am doing here, not trying to do. Now you get your trading gear on and I'll be right back. Well, boy, aren't you glad you tried to trade to this statistic? Oops. And there's pretty much what usually happens to me when I try to trade a VPOC migration trade. Now, what the hell was that all about? They just got up here and ran out of gas. I don't guess. I hesitate to look at news because it's so frustrating. Okay, well, could well be Mr. Microphone here because that was 10 o'clock, 10:15. And again, if you don't, I have no political intentions at all here, but it is an unidentified critical risk. Anytime any of the few administration people that are real fond of microphones and giving speeches and stuff get in front of a microphone or a camera because we don't know what might be said. For example, in this case, Trump greets the Turkey's president, and who knows what those comments were. Something dumped the market. So that's I feel it's my job to me and to the stream here to point out the potential risk we have, just as I do every morning with the reports and the numbers. Do you think it would be a good idea to just not have any idea that the non-farm payroll, when the non-farm payroll was going to come out, which Friday, when? Do you think that'd be smart? No, probably not. Same idea, same exact idea. It is a potentially high impact or critical risk, and in the case of the administration or speaking people, it's unanticipated. We don't know, So it's important. And whenever, and lately, since, recent times here in this year for sure, anytime I see a big dump, the first thing I do is go to the news. There's a probability for somebody. How often does that pan out? Funny how they jumped under here with a floor in it. Excuse me. Right at the overnight low. So the other side of the coin of gap and go, or gap rules are that the gap rules say if we close the gap relatively early in the session, which is we have not done yet, and if we're accepted in that previous range and value, it's a high probability we'll trade, like right here, for example, it's high probability we'll trade all the way across the value. The other side of that coin is if we do not close the gap relatively early and are not accepted in the previous range, the thinking is that we'll trade in the direction of the gap. Here's the part that gives me a little bit of a pause here. There's absolutely no excess on this. It's flat as a freaking board up here, right? There is 3 or 4 ticks of or TPOs of excess down below us here. Well, at least that's what I see. This means to me that there's an unfinished or incomplete auction to the upside. Who knows, you know, if any of that is true. That's gap rules. Look it up. There's a lot of other setups floating around out there that I'm sure people are taking advantage of, and I'm not saying anything about them. I'm doing what I do, one setup at a time. For example, there's a VWAP VPOC. That would have been worth 12 points. Boop, bitty boop. Great. That's the reason I'm so excited or anxious to finish this vetting exercise properly, and you know, then those 2 trades will be in my trade book, my plan, my trade plan, or whatever you want to call it, my arsenal, and I can get on with something else. But my commitment and my methodology is to finish this one, and that's what I will do. Boring, I realize. You ought to be on my side of the monitor and see how boring it is. Are we having fun yet? Let's see if we can get, we're not. So there's the context. Is this one of the W reversals? I used to know a guy that traded very successfully that would always go there. A, B, C, and up we go, or something like that. He went, you know. Of course, that works really well, as with everything in the rearview mirror. I knew exactly we were going to do this because we traded up. We didn't get above here. We came back down. We didn't touch the IB low again, and I knew we were going long. Yeah, I'm an internet guru guy. Let me go see if I can find a picture of my wrap Ferrari. or my collection of Rolexes. Okay, so yeah. Well, now this is interesting. Maybe. See this expected move stuff over here? These are levels that I've just been messing around with, trying to figure out. Somebody was talking about how great it works, what. And it's an options thing. So this is the daily expected move. Now these are set by me every night on the first open of the ETH. The daily expected move is calculated based on the expected move from implied volatility on the SPX 1 day out at the money strike. This weekly expected move was set by me Sunday night, 4 or 5 days out, and hasn't been touched since. Every night, the daily expected move, wherever the goddamn other one went. What's going on here? Oh, I know what's wrong. And that's how, this is how crazy it is. This was the weekly move downside. This is the expected move downside yesterday. See up here? There we go. There's the upside. So that, means exactly nothing. As with most of these indicators that are holy grails, I don't think it really matters. Might be easier to see over here. They're plotted here. And you see where there was the expected move weekly, there was the expected move daily right there. So the idea was that today would be up here and here and then down here. And I'll be the absolutely first person to point out, I don't know if I'm foot or horseback when it comes to doing option-y things. So if anybody, the idea as I understand it is that the expected move represents basically one standard deviation away from mean open or open, and that it should contain the trade for the period of time you're looking at. Well, it obviously had nothing to do with reality yesterday, or, today. And if anybody knows about that, that'd be great. I don't. I'm just trying to explain why somebody goes, hey, what's that stuff on your chart? I'm not an options wizard by any stretch of the imagination. Some stuff, I'm trying to look into it to see what I think, but, listening to, and there's some people that I think have good market insights in general. Tom Sosnoff, for example. Hard for me to argue with somebody that's been a successful trader for 40 years, you know what I mean? If they've consistently made a lot of money in these markets, then I think they're worth listening to, as opposed to some yahoo that started last Thursday. So what I've been able to figure out about them, or so far, what my understanding so far is that you can get your ass in a crock real quick. There's no defined risk, where it's hard to define a risk on a single option. Now, if you use multiple options like a spread or I don't know, all those, floated pig or whatever those names they come up with are. Jade lizard. I mean, come on. What is that all about? Anyway, and what I also understand is that they can be rather capital intensive, because every option is for 100 shares of the underlying, 100 of whatever. Underlying, I guess. And expensive commission-wise. A lot of people I know that make their bread and butter. No, I personally know of that say that anyway. Make their bread and butter with options. But I don't know enough about it. What I like about the futures it's the most transparent and, I believe, least manipulated market there is out there. The futures market is primarily a hedging vehicle for options. Options is a big market. Options traders. So if they're, if they're long and underlying big time, they're going to be shorting futures for a risk, for a hedge. Or the other way around, I guess. Anyway, with futures, it's something I understand. There's a fixed, I can have a absolute identified risk within reason. I mean, if you put a stop in the market, that's your risk. I use a 3-point stop. That's my risk. That's on a two lot or two contracts. That's $300. I know that. Now, stop order changes to a market order when price touches it. So if you're in some kind of a, black swan event or something, you can get some extreme slippage, but you're gonna get out. Typically. If you don't have a stop in there, then you just might as well, douse the fires and pack up the tent, because you're finished. Never, in my opinion, my recommendation, never enter a trade without full bracket. Have your stop and your take profit targets. If everything goes okay, you can manage those, never move your stop away from entry. You can trail it up that's what your backtesting has proven to be, more profitable for you. But yesterday was a perfect case. Standing here like this, watching the market go up and down and everything working along just fine, and then all of a sudden, bip, bookmap fell over. There were several people on a couple other places I know that were in trades. If they didn't have a bracket order in, and a bracket order that was server side, they were SOL, boy. Potentially. Once again, it's about your prime directive as a trader is to preserve your account. i.e. manage your risk. You can have the most phenomenal setup, 1000% win rate. And if you blow up your account and can't trade tomorrow, what the hell good does it do you? That's your first directive. And then you size your stop and your risk based on your account parameters. If you're a prop outfit, they have a loss limits and things like that. Whatever is required, that's how you have to do it. And remember, I'm talking to myself from a point of view that I am in the process of, maintaining and further developing a successful, consistently profitable trading business. If you are an adrenaline junkie and you like clicking that mouse, good for you. I'm talking about it from my point of view. Okay, a quick run around the roses here. I'm not looking at the news. It just pisses me off. And I'm sure they're, talking up a storm. Erdogan and Trump and whoever. Yeah. Boo. We having fun yet? I guess so. Okay, a little crazy Ivan here. I'll tell you one thing for sure. I am, every tick, I'm less interested in an IB continuation trade. That's for damn sure. One of the things that I find difficult, well, pick one, right? But as I've talked about in the when I was describing the IB trades, the two of them, there's the IB failure, which is essentially mean reversion, and there is the IB continuation, which is suggested in a directional day. The IB failure would be suggested in a rotational day. Well, what is today? That's pretty freaking directional, isn't it? Until now. So I've noticed, or I have observed in my history, in my stream, that there is frequently a change of context, a change in this theme of the market. And I usually, what I've noticed it to be is when we start out in a rotational day, and I'm looking for an IB failure, and at some point, unbeknownst to me, well, I guess while I'm still, my monkey mind is still looking for that IB failure pattern, it turns into a directional day, and I don't act on or take advantage of or trade the IB continuation. So that's something that I need to figure out. And as with everything in life, and for certain trading, it's can be time frame specific, right? If you don't look at any of this and you're only looking at this, it's rotational, isn't it? And if you're, you know, here we go. Now what's the day like? What is going on here? How about there? Well, that's a bar trade, isn't it? I think it's, for me, it's important to have the entire context in my mind, or in my view, so that I can see what's happened so far in the day. And I like to keep 1 point high here on the price ladder for a sense of scale. They're getting all those IB guys all anxious, if you know what I mean. Look at all these hits up here. Well, there's got to be some stops living up there, isn't there? Some fuel. Everybody picking the top. likely we're going to get this. I mean, there's a 98.6% probability that we will take one of the two IBs out in the day, right? Which is looking like going to happen right now. And there we go. All right, so there's the IB statistic. Now, zoom in a little bit here and see what it looks like going to happen going forward. That was only 364 stops. That's kind of a small number for the number of times we hit that top end. And now we're going to continue up, it looks like, but this is not my criteria. And don't forget, we've still got gapitosis up here. Okay, now what is going to happen? Well, now I have to really start thinking about this. Maybe not very hard, but I'm still of the opinion that the IB continuation is going to be the trick. Let's see what happens. Okay, there's the IB continuation in. There's all the there are all of the entries, and there's the stop. Now we just stand back and see what happens. Not good here that we're not getting any follow through off that buy, but we'll see. If we get our scale, then that's a good thing.
Order submitted.
And I don't touch anything, because that would invalidate this instance for the data set. That line there, I think, is going to be the developing value area high, yeah. The flag just hasn't caught up with it yet. Okay, so I'm not liking this consolidation like this right there below that IVI or the developing value area high. Just because I would like to get my scale off here and see if they can get that gap closed. I don't know what'll happen. But I don't touch anything because that's not the game. You see how the system works. No question about the transparency here, eh? There's the entry, top, second target's up above us. There's our average entry price, 2 positions, there we go. Well, let's see now. Might be a little bit of a poor entry because of the this area down here, but definitely not going to move the stop away from its position and see what happens. That's all you can do at this. All you can do at this point is see what happens.
Price action's not looking too suggestive here. There we go. Stop to the tick. Ah, well, that's a little better. You see how the copy works now? That's a little bit of a. You see what was wrong here, or what I did poorly, was my entry right here, putting my stop just above this level. Were this not a trade for the vetting process, I could have moved the stop down and my profit target one up the same amount of, so that I maintain the 1-to-1 risk reward, the risk neutral setup. And so far that would have been a good idea. Now, right now it's minus 24 ticks. So there we go. So that was a 1 to 2.5 to 1 ratio trade. And that's the way it works. And there's always these instances where that happens and you go, son of a gun. Now, this is not to say that this is going to go up here or that it's going to fall down. And I am certainly not going to try to put on another one because I'm conscious of the adrenaline going on and the FOMO and all those kind of things, which is the monkey mind, right? You're always going to have that. The monkey mind is those reactions and all of that stuff that's built into our wiring, right? Into our DNA from thousands of years of development. FOMO, fear, wanting to be right, all that stuff. All of those things. And this is a crazy day. No question about that. Very likely we'll go up through there again, but this is not a trade for me to take now because it's not part of my vetting process. This is not a, nothing that I've got around the IB continuation trade says to do this. I'll tell you what is interesting though, and I will, I will definitely, come on, you son of a bitch. Where'd the day go? There it is. I will definitely review this now, but my backtesting rules that I put that I've developed for the backtesting story that I've been doing. Would have impacted this entry. Now it's still not working out, okay? But the rules that I have on either side of either of the IB trades are number one, the IB statistic. The first rule is the IB statistic. Let's open this up. The IB statistic is taken out, and that's right there. The second rule is that price trades up to within 3 to 5 points above in the case of an IB continuation higher, pulls back to within 1 point either side of the IB high, and then go long. Which I sort of did. This is, what is that, 65? No. So this would not have been qualified as an entry. In fact, there would not be an IB long entry here. Now the qualification for an IB short is the IB is taken out. Is taken out here. Price pulls back to within 3 to 5 points, and this is definitely 3 points because there we go. We know that for a fact. And then price trades up within 1 point either way of the IB high, and you go short. In which case, this would be scaled. The question is, maybe it's easier if I show that over. I mean, I'm not taking a trade here, so I don't need to worry about it. Let's go over here to the IB page. So this, first of all, this is today. No, it's not. What am I doing? There you go. I'm going, wait a minute, that's not right. This is today. Something there is gonna be today here pretty soon. What's going on here? There we go. There we are. Okay. Now, this is just a chart. These visual reference lines are only for my benefit. They are not referenced to the program at all, nor are these flags or these signal markers. I'm keeping an eye on the chart on the other side over here just to see if. Oh yeah, I should have taken a screen snap. Sorry about that. I put these annotated screen snaps into my static journal with the trade. I forget to do it. So here is here's today's trade. Boom, 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 boom. There's the gap. Okay. What I've done here is these different levels are the IB high, IB low. 1 point either side of the IB, which is that I'm going at this the wrong direction here. So there's the IB high or low. Then we have the pullback above or the pullback below the IB from 3 to 5 points, both sides. And then we have the retest, which is within 1 point either side of the IB. So the idea then is to, and then I've marked these rules, which I will try to find some that have been taken. Well, the way I'm doing these is A, B, and trigger. Obviously, they need to be in sequence. And they need to be, make some, this probably doesn't make much sense to anybody but me, but I'm sorry. So here is A. In other words, the price comes down to the IB low, the opens above, closes below. the IB low. That's A. That's the first trigger. B, price trades. This would be for a. This would be in the case of an IB failure trade. It closes within this pullback zone. Then, if there were to be the third trigger, which is this guy here, on the other side of B would be up here, pull back up, and then short. Or in this case, it would be a long, so you'd still lost money on this one. I'm not doing a very good job of this explaining, sorry. But you get the point. The point is that if I'd have been using my rules here, been following these rules, I would not have been in an IB long. Huh. And they can't get much below this pullback level there. Yeah. Or this support level. I'm not saying they won't, and I'm not interested in trading this anymore, because that's not my deal anymore. And I don't think it's an IB failure. I'm real going back to the monkey mind story. I'm real aware of the fact when Monkey Boy starts trying to talk me into something, you know, like, oh, well, let's take the IB short, because I really wanted to have this trade work and be over the hump with all 5 of those trades. Now I've got to have 2 trades to get over the profit target. So, you know, anyway, let's go back to the point here. This thing's not responding. All right, there we go. So here we come. Remember, this is 9:30 over here. We didn't take out the IB stat, any of this crap. We know that. And here we go. We come up from the bottom. Open is below the close. High is below the IB. Next candle. Open is below the IB. Close is above the IDB. There is the A rule. Now, for an IB continuation trade, which is what I took and got salt pounded in my ass, thank you very much, I needed to have trigger B, which means price would trade up to here, pull back to within 1 point either side of the IB within these dotted lines, and go long. I didn't follow my own rules here, which I just worked out over this weekend. This is actually, let me backtrack a little bit. The rules for the IB failure are ones that we have discussed a lot in the Statistic, and was a set of parameters or rules that Rod uses. And so that I built this to test that. And what that says is for an IB failure, which remember that the testing is the IB continuation here. For the IB failure, we take the stop, we take the IB high, we trade down and close within this pullback zone, which we did do, have done. We trade back up to within here in the 1 point zone, and we go short, targeting a VPOC, targeting the IB failure south. Had I done exactly that, I would be scaled. See what happens when you don't follow your rules? Now what I can do here, and I've only built the signals around the IB short, IB low, because I wanted to make sure I was doing them right. So there you go. Well, that's a pisser, but hey, shit happened, right? Now we have an IB migration higher. I'm not going to get all bright-eyed and bushy-tailed about a long here. And this is trading. There was a 50-50 probability that I would take the stop or get the scale or the stop. And as it turns out, it was the stop. It is real interesting to me now to see, however, that back to that conversation about context, maybe not have a presupposed concept of the context involved as far as it goes dictating the trade I'm looking for. And where I'm going with that is thinking about the rules over here. That the IB failure, would have clearly been the right trade. Well, not clearly, but would have been scaled. And that's pretty clearly. Once that risk neutral scale is in the bag, your trade is risk neutral and you just, go for a bike ride, put your helmet on, whatever. The results are the results. In fact, now with what I'm doing, the results are the results the minute I put the open on, the entry in. So that bracket, the pullback is right there. Wait, right there. And then there was the test up, so that's correct. There's the IB. We didn't get into the area, into the whatever that is, whatever you want to call it, pullback or whatever above. We did, however, get into that area right here and test back up to, actually right here, and test back up to the IB. Short, nothing, or scaled, nothing. Down here. Now, I haven't made any money yet, but you're at least scaled. And that's, I'm going to really look into that seriously here in a little bit. As soon as this breakfast food coma wears off. That's quite interesting. Hmm. That's pretty darn interesting. That's pretty interesting. Yeah. What was I doing now? And then this is just hammered crap as far as I'm concerned. I'm not upset at all that I took that trade. It was the trade I was supposed to take. However, I have just noticed my rules here. And I will follow those very definitely going forward. I think that's a real epiphany, actually. I'm quite encouraged by that. And what the hell do I mean by that? Well, the rules are as follows. Let me zoom out a bit so we can see this maybe easier. The IB continuation rules say that we will take the IB stat, which we did right here. We trade up to within from 3 to 5 points above the IB. We pull back to the IB high within 1 point either way. And we take a long. Off we go. The IB failure, on the other hand, is that we take the stat. We pull back 3 to 5 points. We trade up to within 1 point of the IB low or IB high, and we short. So what happened? We did not get into the carry on or follow on range zone, which is up here. This, remember that my bracket is 3 point stop, 3 point risk neutral target by definition. So that's 3 points. Okay, there's the entry. We did not enter the zone, which is 3 to 5 points above the IB. Because we didn't enter that zone, there's no pullback involved and there's no trigger. On the other hand, for the short, we didn't enter this pullback zone. We trade back down. We fluff around here for a while. We fluff around some more. We do finally trade back into the 3 point zone right here and trade immediately back up to within 1 point of the IB low or IB high, which would be the sell trigger, and down we go. There's the scale. So you're scaled risk neutral from here on. What's going to happen now? Let's mark where we are. We're in the second pullback at 10:57. 10:57. Risk neutral scale. Up we go. Down we go, up we go, 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 and some more down we go. Now what we need to do is we need to get to 12 points below right here, our entry. So that's 72, that's 62. We need to get to 60. We need to get to right there, the open. Well, that's interesting. The open plus a half for the 12-point profit target. Oh, okay. I got all excited seeing this, seeing this iceberg down here. Oh yeah, there we go. We just have to get to right here, and there would be our 12 point take profit. There would have been our targets. I don't know why I use that we and our crap. I'm not the king or the queen or anybody else. There would have been my target. Okay. My goodness. I knew something was going on, and here it is. Starting at 11. Ending at 11, starting at 10:30. Okay. I wonder if if Trump realizes that tariffs are never going to kick in to help farmers. Maybe there's a big part of something I'm missing, but I try to read up quite a bit about that, and you see why I call these undefined critical risk, unidentified critical risk. This was a meeting between Trump and the president of Turkey. And he takes the opportunity to have a press conference about aid to farmers and things, which we don't have much, I don't think, trade with Turkey and agriculture, but okay. And but it very definitely impact the market. And we've gotten our 10 points here, more than enough. Right there. That would have been our 12 point target with the IB short right here. And really no heat. 1 or 2 ticks right here. That's how trading methodically and with a plan can work. Now I will very definitely be aware of this going forward. It's still a little bit news related because we have this VPOC migration higher, etc. But yeah, anyway. So what do I have down here? Okay, I used to have all of these balanced out. I don't know what happened to them. Or why, but anyway, so here is a pretty clear synopsis of everything to do with that trade. In, out, total time, results, ticks, MFE, MEM, MFE, MAE, the whole shooting match right there. It's pretty clear. Oh, I guess I could do that like this. There we go. I try to do a snap that shows everything. Except, you know, that special stuff, the secret sauce. So we're $1.25 high, and we're full session wide, and that would have been the stop right, or the take two profit there. And they got quite a bit further from here. And this is probably more news. So I'm gonna slide off to get some water, take a shower, do that kind of thing. Have yourself a great, be careful. Lunch hour's coming up. All right, what happened now? Well, that's a real fine how do you do there now. And looking at this on a bigger scale, obviously, which is a way to do it. Remember, its time frames make such a difference. What's happening now? Well, so far, if you look at it closely, higher lows, and there for a little while, higher highs. Now we're kind of funneling into that megaphone thing. What we're doing is we're building this profile out up here in this distribution. P-shaped profile. Just the big P here. That is short covering. And look what's happening down here. It was, oh boy, the sky is falling. Now what do we got? Well, we're sitting on a doji, pretty much like we got here on the Fed rate decision. I'm not saying it's over. It's not even noon, but you get the point. Really important to keep your context. I'm quite satisfied with the trade I took here. I'm not satisfied with the outcome, but the outcome was 50-50 after I put it on, and it met the rules that I have been using for the IB continuation trade, not what I have been recently vetting in the backtesting. Let me start over. I've been vetting these IB trades manually, basically, and so far so good. I was up to within one trade of all 5 of these going over the top. Now, the way I've been trading them is take the IB statistic, we pull back, we come up, a little bit of a hiccup here and go long. And then you see that we didn't get back up here because this iceberg was parked out here with a 1 lot. Still there, by the way. There was the scale. What I failed to recognize was the rules that I have been backtesting that go like this. If I'm looking at an IB continuation trade, rule number 1 is the stat is taken out, which is right here. Rule number 2, we trade up to within 3 to 5 points up here, because this is 3 points, remember. This was my first take profit target, which is 3 points above entry. This is a stop, which is 3 points below. Convenient for this exercise that I'm doing now. We did not get in there. What we did do was we pulled back to within the pullback zone for the IB failure trade right here, below 3 points. Traded up to the IB, within 1 point either way. Short. Scale. Hardly any heat. 12 points. T1 and T2. So I did not react quick enough, or I was not switched on enough to recognize that at the moment. And that doesn't mean that it's the wrong rules or the wrong trade, and it doesn't mean that I did the wrong thing. The rules that I have been, the methodology I've been using, in which I have gotten up to all the wins that I have under my belt here for the IBC, were as follows. And I know the outcome of the next trade is 50-50. I didn't touch my targets. I didn't touch my stop. And there you are. That's trading. boys and girls. That is trading. And now I'm going to shift over to the backtest world here. And here's what alerted me to that. I have been, this is the backtest for the IBC. There is a similar one for the IB failure. I will, and this weekend I will combine them so I can run one backtest for all. And what I've been doing here is for example, here is the wrong one. There you go. Here's a risk neutral backtest, back 500 days. This is the IB continuation. These are different pages, just consolidated together so I could post them in the over in Static. The way this would work is, this is an IB continuation. The rules are specified here. I set the backtest up here. I go 500 days. I go, okay, it's the correct contract, sizing, period of day, you know, the session. Yes, sirree, Bob. Boom. Took 3 seconds to backtest 500 days. You get any, I would be older than Methuselah if I did this manually in the live market. That's why backtesting is, there's two reasons that I find it invaluable. Number one, it took 3 seconds to backtest 500 days with these specific rules. And that's the second, perhaps more important part, these specific rules. There is no freaking way any kind of discretion entered into this. You want to change the rule after the fact? Okie dokie. I took 264 trades, 128 of them were long, 136 were short. That was the net. It was 34.4% or 34% profitable. In other words, that's the win rate. The average win to loss was 2.13. 264, there were 90 winning trades, 86 losing trades. The balance would be scratch. Okay. Maximum loser is 300, maximum winner is 912, which is a little bit crazy because it should only be 750. And this is definitely what the stop is at 300. If you want to be extra careful what you're up to, come on, god damn it. So tired of this shit. Just work. Oh, I know what's the matter. IRT is busy thinking. Here are all the trades. There's each and every trade going back to October 26th, 2023. The first trade at 11:03 was an IB short. It took T1 and T2. $750, as expected. Here's the next one, $750. Here's a full stop on November 3rd. And you can go back on the chart and plot these out yourself to verify. That's a proper backtest. Another thing you can do here that I have not done yet, that is, well, first of all, let me shut up and go on. Here's something that I find really important from a psychological point of view. Maximum consecutive winners were 4 winners in a row. Maximum consecutive losers was 5 losers in a row. That means you took 5 stops in a row over 500 days at some point. Now, 5 times 300 is $1,500. How does that impact your account daily loss limit? You'd have to go back and see if these, were how many of these were in one day, etc. To find that, to really get to the bottom of it. And you could do that with your with the trades that I just showed you. But you can analyze, are my account risk parameters, in other words, the bracket setup of 3-point stop, 3-point risk neutral, and a 12 points or 48 ticks right here. This is the basic risk neutral package right here. It's 12 tick stop, which is 3 points, 2 lot size, 12 tick positive risk neutral scale, half the package, and then the runner's 48 ticks. So that's what was run here. You would have to see if that 12 tick stop loss, for example, if these were all 5 in one day, which I'm sure they're not, if these were all 5 in one day, you would have been over the daily loss limit if you were on a prop account. If you have a $3,000 funded account, or your brokerage account is $3,000, you spent 50% of it. That's not good risk management. That's why I say in the pre-market, when we get to the part about the setting up the brackets, the first consideration is your risk. Oops, what I was talking about was over here. 5 consecutive losers. Now, if you're the next thing we have to consider when we're setting up our original bracket in the morning in the pre-market, 12 ticks. Is 12 ticks on a 2-lot, which is the minimum risk neutral package size because it has to be an even number of contracts, is $300 or 24 ticks fit in the risk parameters for your account or not? If not, then you need to do something about it. You need to be realistic about ATR and your stop size, and you need to be realistic about your contract size, your lot size, or the bracket size. Now, this is the smallest one. If you need to stay at 12 tick stop and $300 is too much risk for your account, then you need to drop down. The only thing you can do at this point is drop down to a micro, because this is the smallest ES package you can have. I hope that's clear. Back over to here then. One of the things that I've done just recently for Rod is some what ifs, right? And that's the fun part. His question was, what if you go all in, all out at 48 ticks? I can run that one easily. What if you go all in, all out, and only 6 points instead of 12, which is what 48 ticks is 12 points. 24 ticks is 6 points. Okay? For one contract. So, and I did those for him. And they are here. There's 2-lot, all in, all out, 24 ticks. That's 6 points. Oh, well, here's the correct one, I think. Yeah, here's all in, all out on an IBC, 2-lot, 24 ticks. That's 6 points. And there's the IBF. As opposed to wherever the hell it went, as opposed to here, which is no. This is a 2-lot risk neutral package, the usual setup, 12 tick stop, 12 tick T1, 48 tick T2, IBC, 500 days. And there's what we have. We had 6 winners in a row. And 5 consecutive losers. Why? This was the 23rd. This was 2 days ago. I mean, this is live, real stuff, right? Now, one of the interesting things that you can do here with backtesting, while I'm jabbering on about backtesting, and which I'm looking forward to do, you see this optimize? Now, I'm sure some of you have immediately got your antenna up. With optimize is another word for curve fit. Exactly what you do not want to do when you're working with trading stats. So the way you can back test and then forward test with IRT is you set up your parameters, as I have done here. You set up your back test between, let's say, the beginning of the session or the beginning of the data to the first of this year. And you back test that, whatever it turns out to be. And then you optimize that strategy over that period of time, the beginning of the data to the first of this year. Now you can forward test. And what that means is you take this optimized strategy and you run it over the data from the second of this year to today. You've now or optimized your strategy back, 1,000 days or something. And then you're going to apply and see how well that optimized strategy would perform in the current market. That's a forward test. So that's pretty interesting. What I was going to show you over here was the following. This chart is just for my visual reference to make sure my rules make sense to me, and also I can push this send to chart. I can send these trading rules and the results of the backtest to this chart, and it'll plot them. Now, all of these lines that you see, and now some of these letters and things up here, these letters are signals. Each one of these is one of the rules. These lines are the various criteria for the rules that I was just talking about. And this, again, these got nothing to do with trading or backtesting. This has got to do with old guy visually testing, visual confirmation. So here's today. And the only rule I have plotted today that we have accomplished today, is this IB high right there. And I think I changed those down to, yes, I did. I made these, I don't know why I got 16 here. That's pretty crazy. Okay, so that is A. That's the A rule. The next one would be B, and then there would be a T for the trigger. So the A rule is when we trade up from the bottom, open is less than the close, high is less than the IB high, next bar, excuse me, open is below the IB high, close is above the IB high. Boom, that's the rule. The statistic has been taken out. That is the IB statistic in a nutshell. And it all happened after 9:30. these lines only start plotting at 9:30. So I can visually say, if this A was over here someplace, I go, wait a second, something's wrong with that rule. And you see, it's exactly correct. There was no signal whatsoever in the IB, anything to do with the IB low so far today. Now, I haven't created the rest of the rules for the IB high stuff, unfortunately. God damn. This thing is so irritating when it does that. For example, here, I've done the IB. Now, these are in kind of goofy order, right? Because I haven't figured out how to do this yet. Here is A. This would be an IB continuation, or in this case, an IB short. So the way it works is the IB statistic for the lower IBL, the IB low, again, open is above close, high or low is above the IB, next bar, open is above the IB, close is below the IB, boom, there's the statistic. So A is correct. Now we have T and T and T, which don't apply yet because there's no B involved yet. Here's our first B rule. And that states that the low and the close are within the pullback zone. If we were going to get a valid trigger for this IB short, we would need to have, or IB long, I'm sorry, we would need to have this trade up to within 1 point either side of the IB low, where we would short, and boy, oh boy, down you go. There would be a T right up here. Now, there's probably a way to filter these out and have them sequential somehow. I don't know. I'm not real worried about it because it's just a visual checksum kind of for me, right? Now, it's interesting, you see, if, for example, this trade right here, this bar, just went a couple ticks lower into this zone, that would be B. This would be a trigger, and we'd be short. And down you go. And that would have been a beautiful thing. So that's where I am so far with backtesting. And that's why I think it's important. The way this pushes to the chart is as follows. There you go. Nothing today. There's one. Hold on. Pretty big sneeze there now. Okay, so this is whatever day this is. This is the 19th. Here's our first IB low. this is going to be an IB continuation, remember. There's our first IB low. Here's a bunch of triggers that don't apply. Here's another IB low. Here's B. And here's the trigger. Short. This line right here is my profit target for T1. The trade is scaled, risk neutral. And did. And this is the stop, and it got right there and took the stop. So there's a couple of idiosyncrasies if you're using IRT and you're going to do backtesting that I want to point out. I've pinged Eddie and Bill, and if this can be changed, can I change it? Whatever. The setup for this. Shit. The setup for the for this indicator. Oh man, come on. Anyway, it doesn't compensate for multiple targets. It just looks at one, right? So wherever it says minus 12 ticks, like a 12 tick loss, that's actually a scratch. There can only be a scratch or minus 24 ticks or plus, and it also doesn't work with a winner, with a 2-lot winner. I mean, both, a full win. In other words, where you have T1 of 12 points, 12 ticks, and then T2 of 48 ticks. That should be a total of 60 ticks. It also does not plot that properly. But for the purposes, just like with my little signals over here, they may look a little goofy to somebody that's not in, didn't do them like as I have done. But I can tell that, okay, is the entry where it ought to be? Is this the right rule? Is there a B and an A before it? And I know the stop is correct, and I know the T1 target line is correct. There you go. And they go back, Now, that's how you visualize or send a system to the chart right here. So that's where we're at. I can't wait to get those rules coded up properly. What I'm thinking I'm going to do here is, while I'm trading, now here's one I don't know. I wonder what happens if I put those rules on a Renko chart. I don't know. What I was going to say was, I'm going to keep this chart, get this chart set up properly with both IB continuation and failure from both IB high and IB low, so that I have a full range of charts with the signals. A full range of signals with all my little reference lines, and then keep it over here and watch it against the book map. For example, if I'd have been, as I pointed out really earlier when this whole diatribe started, if I'd have been watching that, I wouldn't have taken this trade, because it didn't meet the IB continuation criteria over 3 points back. It did, in fact, meet the IB failure criteria and immediately went to a scale. No heat, and on to both targets. Aha. And with that, after 12, no wonder I'm sleepy. I need to go put some medicine in my eyes. I'll be back. Well, we went both ways, huh? We have a neutral day now. That's about 32%. I'm not sure what the probability is, but let me look exactly. What are we going to do? We're going to jump over to our stats chart here. Yeah, 32.2% of the time. Something that you may not have noticed on this statistics, every statistic that is taken or that is satisfied is highlighted in blue. Like you see the IB high and low stat here has been reached, so it's that text instead of gray is blue. First of all, IRT highlights the correct open type column, and then it changes these to blue. So that's pretty cool. Where am I now? Let's see. We're at 130, 1338 in the state. What's the name of this state? Something, what do they call it? The Lone Star State. That's it. Excuse me. So what a day, huh? Look at this deal here. There was my trade, which I've gone over at length. So I don't need to do that anymore. And yeah, boy, was that IB failure quite the trade, eh? What do you suppose this was all about? And this. Now, this is truly an IB, a 12-to-1 trade statistic in play, and I have no intention of messing with it. But what that statistic says is as follows. If the market is out of balance and they make a new high or low between 12 and 1, there's a better than 90 whatever % chance of exceeding that at some point in the balance of the RTH session. It's like the IB stat, only it's high or low between 12 and 1. So here we go. This, this, and this are good examples of why I never trade this VPOC migration. This has got to be news.
Got to be something going on in the House of White.
this is all news driven, I'd say. And then again, what do I know? So 30 seconds in the, no, a minute and 30 seconds. We're in the power hour. So excited. Oh boy. All right, here we are at the final world famous power hour. What a weird day, huh? Ooh. Well, I did learn something pretty interesting today about my IB continuation / failure trades. I'm going to be looking at those rules going forward. I've spent a lot of time talking about it, so I won't go back over it again. It's obviously in the stream right here. There's the entry, stop. T1, T2 is right up here. T3, stop. I didn't adhere to the rules that I've worked out recently in my code for my backtesting. And had I paid attention to that, I would have had a phenomenal winner today rather than this loser. But hey, that's what happened. This is, I'm perfectly fine with this. I risked 24 ticks to make 60. Oh, there you go. That's a good risk reward. I never touch anything. I'm not worried about that or over trading, so. What was that? I heard something going on. I heard a bell here. What's the bell? Yeah. So anyway, I'm happy about that. I've gone over the backtesting ad nauseum. And we got to make another key for that. Now, there is a trade that Rod and company have been looking at a lot called the V reversal. I wouldn't say I have no specs or data on it, but you know, as with all rear view mirror trades, it's pretty clear in the rear view mirror. Boom, boom. This is a 32% probability that we took out both IB high and low. So that's an interesting one. I'll do around the recap here at about 14:30, and then we have the market on close imbalance orders at 14:50. Well. Not a very uplifting day for me. But a day nonetheless. This is trading. It's a there's three positions: long, short, and flat, and you're flat most of the time. Anticipating a structured trade And then if it sets up, you take it. If it doesn't, you don't. Simple. And you don't change your trade plan or your strategy in the middle of the trading day. Like I am going to review this epiphany that I had this afternoon about these rules, or here this morning, whenever that was, this morning. And I'll be looking at that going forward, but I would certainly not, try to change it now and do something. That's crazy. Okie dokie. Always tickles me when they have a day like this where they just trade the hell out of them up one side and down the other, and we end up right back where we started. Dumbbells out here, do a little stuff while I'm watching. Going on here. Well, this is a disappointed about the trade, obviously. I would have very much liked to have at least gotten the risk neutral scale off. What I would have really enjoyed doing was getting my profit targets, and then having these 5 accounts over the hump there. Wow, 40 handles. 40 handles wide on the IB. That's pretty incredible. At least Bookmap didn't have any problems fall over today like yesterday. Seems like that's always the day when the real obvious trades are out there. You know, typically, right? This is probably easier to see right here. Open. Boom, 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 boom. Oh, wait. Oh, wait. Deja vu. Absolute and classic speculation having nothing to do with the value of an S&P, of the S&P, in my opinion. So we took out the low, but not the high. Oh, yes, we did too. Oh, no, we did not. Look at that. Isn't that funny? We got within 8. We got within 4 handles of closing the gap. So our statistic of 66.9 or whatever the hell it was did not come true, did it? No, it did not. And couple of, hey Panda, what's up, pretty girl? Couple seconds, we're around the curve. Okie dokie. There's the final curve. And here comes Panda, jumping off the bed. All right, what's the daily recap look like? Well, let's start with the news, I guess. Here are, I should say, the reports for tomorrow. We got the PCE, core PCE, Michigan numbers on Friday. They can really be market movers. And then the usual stuff. No real earnings this week or next. Nothing tomorrow. There's financial juice. I don't care much. This will be the here's tomorrow. See, they've got the Michigan number as a 3-star or lightning bolt, as they put it. And the squawk box is the squawk box. We'll see when the market on close orders show up over here. By the way, these are both free. This is my, this is Financial Juice, and this is investing.com. Both are free. You can filter them, whatever you need to do. Well, we're still holding way up high on that volume. We're way up above 149. Started out around 60%. Now we're up to about $1.50. The ATR did come back down to within 5 halves now. See, that's another problem right there. The ATR was running about 7.5 on my trade. So that's another problem that you need to address, or that needs to be considered, I should say, rather than addressed. We're gonna close pretty damn close to where we opened. We're right on it now. Here's our market profile chart. We've got excess on both ends now. It's basically a P-shaped profile, so that's short covering. Here's the micro composite, which is my version of a high time frame. RTH session, daily bars or candlesticks. Wherever price overlaps, I draw a volume profile around them. That generates this market micro composite volume profile here, and it produces these high and low volume nodes, which are indicated on this chart by the red and green lines, and then they're pushed over to bookmap. Here's the micro composite MCVPOC, which we just tagged. Looks like we're going to end up in a doji kind of a thing down there again. That's a big indecision. This bar will not be incorporated into this micro composite, nor will it generate a new one, obviously, because there's no overlapping price, and it did not overlap anything in terms of recent bars. So that's how I'll do that. ES and Q, what do you want to know? There's my my backtesting stuff. And moving here to the book map now, a micro composite. These are the levels and things that I enter manually. And we did close our gap low, but we got within 4 points of the gap high and couldn't close it. We did take out the micro composite volume point of control. There'll be a new, well, there won't be a new one because we don't have a new micro composite for tomorrow. That's what was over here. Let's see why I had that wrong. Stand by. I had the wrong value for the overnight volume point of control. 62.9. Oh no, 82.9. I was right the first time. The football. I'm looking left-handed here. My eyes are getting terrible. 82.9. I saw that there and then wondered what the hell that was for, and it took it off. You notice that none of these other statistics have been messed with, and they will be. They are, if you are around here much, they're reset every day in the pre-market, and that's where they stay. Those give us the targets and ideas for the upcoming trading session tomorrow. When I put them in there in the pre-market, these were for today, and they are these high probabilities because that's the fact. That's math of 2,000 days in the total sample data set. We opened lower out of range or gap down 292 of those days, and of those 292 days where we opened lower out of range, the overnight volume point of control was revisited 82.9% of the time. And there you go. That's my story, and I'm sticking to it, by golly. None of this is hard. It's just, you just need to be disciplined and methodical, and you'll be all set. You will have a consistently profitable business as a trader, or trading business, however you want to say it. Yeah, so this is the high and low volume nodes, which are pushed automatically from IRT to Bookmap. The full session volume profile, which will reset and start tonight at 1700. The RTH volume profile, which will reset tomorrow morning at 0830. And then my notes column, which I explained pretty in depth, and how it's completed and propagated or populated and stuff during the pre-market. But essentially, I change. The first thing I do is clear all the column notes, and then I start putting in the statistics and change the title of the column to the open type expected for the day. Today was lower out of range. Who knows what tomorrow will be? These are the session prices, which are generated by my IRT and pushed to Bookmap. I share these session prices freely and openly with whoever can use them. They come as a CSV file from Google. A lot of people do use them. You can put them in the Cloud Notes column, as I've done here. You can put them in as the data driver for this indicator. You can put them in whatever other kind of platform you've got that can use that sort of data, or just look at them on, have them to look at on a on an Excel sheet, and they are updated 24/7, starting at 1700 Sunday night through 1600 Friday afternoon. Real handy if it's here on. If you have them on in a environment where they can be automatically, whenever the update pushes from IRT, they're updated on your side. There's no indicators on my Bookmap or IRT. There are only the POC for both the full session and the RTH session. Right now they're on top of each other, so you can't really see them. Here you go. There's one. There's the other. The full session's a little darker yellow than the RTH. There is, and POC, remember, is nothing more complicated than the price at which the most contracts have traded so far in the session. That's it. And you notice right here, 16,450, 17,878. You won't find a higher number anywhere here. The minute you see a number here that is one contract higher than 16,450, in other words, 16,451, this POC will move there. That's all there is to it. There is a VWAP for the Globex and the RTH session, the mid for the RTH, and we have the IBs high and low, which I hope you know by now are nothing magical. Simply mark the high and the low of the first 1 hour of the RTH trading session, period. Nothing more complicated than that. The name confuses people. Its market profile name stands for initial balance. There you go. And then there are the levels of, in these gradations over here indicate resting liquidity. That's all there is to it. As I've said a gazillion times, this blue line is super magic. And if you send $10,000, I'll tell you how to do it. This blue line is nothing more than a vertical line. And I set it on the session start for each session. That gives me a visual clue. If I glance to my left or out of my peripheral vision, I notice this blue line. I know that I'm confident that I have the entire session in range on my chart. And if I don't see it, I fix it so I do see it. Because I want to have the full session in range so that I have a real firm understanding and perspective of context for the session. 8 minutes till the market on close. Thanks for stopping by. It's always nice to see a bunch of people. Numbers, I don't know what's who's where or how, but I see a bunch of numbers piling up there, so good for us, I guess. The stream starts every morning at 8 o'clock Central Standard Time, every trading day, with the pre-market and the setup and all of that stuff for, the statistics and everything. And then we have the open, and we trade the entire day here, and that's captured in its entirety and without interruption on this stream. It's turns out to be 7 hours, and a little more than 7 hours every day. The idea for that is this is my virtual trading journal, and I want to be sure that I have a very firm commitment to not take any trade off of the stream. So if the stream is going the same amount of time as the market I'm trading, well, then that's an impossibility. I couldn't do that, even if I wanted to, and I don't want to. You'll notice that to further the transparency and accountability, you notice that I share the entire monitor, not just the application. So you can see any program that's open, hour, minutes, and seconds, dates, and they all tie together over here. Or on RT. I stream this to YouTube because it's really handy for me to be able to review the stream on any device rather than standing here. I have stand-up desks only in here, and so, I've been standing here. Time I go to bed or get through with this, it'll be probably 12, 13 hours every day. And that's plenty. Or more, probably 14. That's plenty, so I can review them on my phone, falling asleep or whatever. And also, it provides another layer of transparency and liquidity and accountability. I can't really think of much else. We got 5 minutes till the market on close. We've reviewed the news. Tomorrow is Friday. Yay, Friday. TGIF, huh? Something I didn't go over today, just reviewing the chapter markers for the stream there. Thought I had this down there, but I don't see it. Something that you need to consider in your off hours while you're thinking about all this stuff. There we go. It is in the chapter marker, so I have to type it. Effort does not equal reward on the face of it in trading. It's not like a job. You work 8 hours a day, you get paid for 8 hours. You work 5 hours a day, you get paid for 5 hours. It's not like that. If you've had your own business or whatever, then you'll understand where I'm coming from. But it is not, there's no direct relationship to effort and reward. Now, you can look at it that there's much more effort than reward in some cases, where you spend hours and hours and thousands of hours looking at charts and reviewing and doing backtesting and all these things. And you're only maybe interact in the market a few minutes. Okay, so there is that side for sure, but it's not a situation where, if you just keep clicking the mouse or thinking that you're going to get somewhere by scalping and taking a zillion trades a day, that is a real bad, and in my opinion, the wrong approach. What you need to do is you need to have a firm understanding that your prime directive as a trader is account preservation. You've got to be able to trade tomorrow. And you do that through risk management and being a big boy or girl. You don't overtrade. You don't click shit out of that thing till you wear out the mouse, you know? That's not what you do. You vet a trade, you have a setup, you take the trade, you make damn sure that when you put the trade on, you've got a stop in place and you've got however many profit targets your trade plan calls for. And then you don't mess with them. You never, under any circumstances, widen out your stop. Ever. You can trail your stop up, you know, for trade management if your trade plan and you've done the homework to indicate that that is a profitable thing or increases your profitability. You can manipulate targets to, for example, if you put on now this is just out of no place, right? But if you put on a trade here and your target was here and you hadn't gotten the overnight volume point of control yet, well, that's a pretty high probability. Maybe put your second target up there for the runner. You know what I mean? But you never, ever move your stop away from your entry because that is your risk. And the key metric that you need to have in trading is risk reward and your expectancy or your R factor. And these internet rearview mirror douchebags or douche canoes, I like that. I heard some Canadian guys say that the other day. It was pretty funny. Talking about their win rate. You know, just blow them off and walk away. Meaningless. Taken out of context, meaningless. I can have a 99% win rate and go broke in 10 trades. Absolutely. If your risk reward is upside down, good night. Simple. You lose 20, you lose 10 and make 1, you're going to be broke in 5, right? There you go. Or 10. That's real simple. Now, if you want to calculate expectancy on a group of trades that you have, vetted, and they must have the same parameters, including stop placement, profit targets, say T1 and T2, and they must have the same criteria, otherwise they don't make any sense. Well, then you can do that. Then you can say, okay, over 100, here we go, over 100 VPOC, over 100, there's our busy talking again, sorry about that. Here is our market on close orders. In a minute, they'll be popping up over here. Market on close imbalance is what it is. Right there. Market on close imbalance. Sell side. 191 million. Sell side. 17 million NASDAQ. Sell side. 3 million Dow. Buy side. 162 million Mag 7. Now let me I hope I snapped this yesterday. I don't think I did. I probably didn't. I didn't snap one yesterday, damn it. Or day before. But take my word for it. It was 1,600,000,000 buy side, that kind of thing. So these are like retail trader numbers over here. Anyway, so now you got it. Back to what I was talking about with R value and trades. If you take a sample set of identical type trades and you calculate the R factor or expectancy for them, it goes like this. Okay, I have 100 trades. My average win rate is 80% times my average winner minus loss rate times average loser. That gives you your expectancy. Another way I like to do it, which is simpler, kind of back of the napkin thing. My stop, we know what my stop is. What is my risk? My risk is 3 points or 12 ticks. That's my risk. That's R. That is my R value. That's R1. This is 1-to-1 because there's R1 and there's positive R1. This is R4. Together they are, whatever they are, 2.5%, R2.5, because you've got two contracts here, and this is one and this is one. You got to be sure you remember that. My R value is not 12 ticks, it's 24 ticks because it's two lots. Got it? Right here today, I took a full stop, it's 24 ticks. So my R value is 24. And if I taken both profit targets, it would be that would be 60, so it's 2.5 to 1. But you can do the risk reward the other way. Risk reward takes into consideration your average winners over a subset of data or of occurrences. Maybe, and that gives you your expectancy, which is probably, then you can figure the Kelly criterion and your various different metrics, but you gotta know what your risk is, what you're risking on a trade, and how does that work with your account. You know, right here, 24 ticks on the E-mini is $300. The rule of thumb is you don't want to risk more than 2 or 3% of your account value on any one trade. So if that's $300, that would be $30,000 to be 1%. $15,000 I think would be 2%. So you'd need a $15,000 account to trade this trade right here, if I'm right. Doing math in my head, I'm old and tired. So anyway, you get the point. If you're trading a prop account or something, then you need to factor in, okay, $300. What's my daily drawdown? What's my maximum loss limit? How far am I away from blowing this thing up? And you need to adjust immediately what that is and slow down. And if you, as I said earlier in the day somewhere or another, this is the minimum trade account size for a risk-neutral trade management methodology, because you need to have an even number of contracts. That's how the whole thing works. The minute you achieve this T1, this first profit target or risk-neutral scale, then you're risk-free on the second trade, second runner or contract, whatever. It's got to be even number. So if this is too much risk for you, if $300 is too much risk for your account or your whatever, then you've got to jump down to micros and reevaluate everything so that you get at the proper risk tolerance level for your account. Really important. And this is just, this is all trading intraday with margin. This is not trading and holding overnight. When you've got to have your carry margin, your carry cost and all that stuff. Okay, 2.5 minutes, boys and girls. This has been fun, I know, but Well, maybe not. I actually, I'm glad I got this trade off. I followed my plan. I didn't touch my trade. I did everything as I was meant to do. And under normal circumstances with this kind of price action, you would have gotten there, at least. Closing the gap, a lot of things in my favor. None of which happened. But, that's shit happens, right? It's, as I said early on, somewhere along the line, early in the pre-market, is the outcome of the next trade is 50-50 because this is a binary market. It is a random binary market. This thing can only go up or down. Can't go sideways, can't go diagonal. Anything to do with horizontal movement is put on it by us with time. And if you stop and think about the millions of traders interacting with this thing, it's amazing that it's as readable as it is, actually, and consistent as it is, to be honest about it, I think. Yeah, I'm surprised we didn't get one more peak up here, but I'm more surprised at myself for not recognizing that this didn't qualify as my new set of rules, which I've already coded in the backtest engine. And what a beauty this IB failure, which does qualify for all the rules. Wouldn't that have been a lovely sight to set before the king? And you see, after I'm through vetting these trades, while I'm in the vetting process of these two trades, I can't change anything. I put that thing on and I just walk away like I did today. Now, I would never move the stop away, so that's never going to happen. I'm never going to move T1 away. However, I could, after T1, I could scale up, I could trail up. More importantly, what I would do is adjust my runner. Like for example, let's imagine I got short right here. Wherever I got short, right there. And there's the scale, right? Because there's T1. Now what could I do? Well, we go down here, and we come back up here, and we come back down here. We haven't hit T2 yet, but I could move my runner out. I could trail my stop up to the last swing high. And just keep doing that all the way down here. What would that be? 60, 70 handle? All right, so that's enough of that pontificating. Have yourself a great night. I'll be back at 8 in the morning. Remember that your health and mental state and cognitive ability is much, much, infinitely more important than your monitors, your charting package, any of that crap. The guy on the other side of that monitor is the person who's making the decisions, and that's got to be firing 100%. If you're on emotional tilt, you're hungover, you're pissed off, whatever, stay away from the mouse. Recognize that you've got a monkey mind. That stuff is built in there from, centuries. You're never going to get rid of it. Be aware of yourself at all times. Be aware that you're on tilt. Be aware that you're feeling FOMO, and don't act on it. That is much more important than how big your 4K monitor is or whatever else. And, as far as overtrading and those kind of things, be an adult. I don't overtrade. I don't crap my pants, and I'm an adult. Okay, next. That's the way to look at it, and that's exactly the way I look at it. Those things are for, I don't know what, people who want a crutch or want an excuse. It beats me, I don't know. But I mean, if this, I can't stop myself from overtrading. Really? How old are you? 4? Come on. I don't buy it. That's my opinion about it anyway. And maybe I'm just lucky that that's easy for me to do. I don't know. So here we are, and have a great evening. Get away from the screens, get outside, get some sunshine. Make sure you got good food, hydrated, rest. Do something healthy for yourself. Go to the gym, go for a walk, take a nap, whatever it is. I'll be back tomorrow at 8 o'clock. Have a good one.